It's Fed Day. Holy moly. Let's get into it. It's Fed Day, then we get CPI Day, we get more earnings. It just never ends. All right. Starting the newsroom. I haven't been in the newsroom for a while. Welcome to the $20 million office that I have over here, sitting on top of a skyscraper in New York City. How's everyone doing today? Oh, feels good. Feels good to be in the markets right now. What's going on, everybody over there on Twitter? The Fed is speaking today. Alina, I can actually see a live chat on Twitter. So if you're on Twitter and you open it up, there is a chat now that I've finally noticed. It's probably been there. But yeah, the Fed press conference will be today. Let's take a look here. Clear some of this off. There we go. All right, here we got the Fed interest rate decision. 30 minutes later, we had the press conference. Is my time zone off? I feel like my time zone's off. We did have daylight savings. Yeah, I think my thing's off by an hour. I have to go -8. I think that's accurate, right? We're getting the 4-week bill auction, 8-week coming in right here. So, what's up, Brian? What's up, Raul? What's up, Blue? I appreciate that, Blue. What's up, LJ? Sly, morning. That's where you get started for Pacific time. Yeah, I'm kind of the same way, so. Okay, so we do have the Fed coming out, obviously later. What's up, Trading Jazz? 12 p.m. is the Fed. PST? Is that, Lou, is that updated from, God, why does that just sound off to me? Probably should have looked at that beforehand. Let me just, is it, because I feel like the daylight savings kind of threw it off my calendar. Morning, Kev. Morning, Stock. Hey, I'm Paul. It's at 2:30 Eastern Standard Time. So I think it is 11:30 is the press conference, Pacific Standard Time. I think what happened was obviously the daylight savings. Fed is at 2 p.m. Yeah, Eastern Standard Time. Yeah. Okay. Yeah. So Blue I had the same thing that it showed on my screen, but I didn't update it from daylight savings time, so I had to move it from -7 to -8. I think that's what it was, because if you go to the Fed website right now, it's 2:30 Eastern Standard Time, which is the normal time. That's why I kind of, like, what's going on here? Okay. I'm gonna bring up my chat room, pull up that global news. Oops. For those that don't know, right, I used to pay for a lot of news services. I tried a lot of them out, and Thinkorswim platform has it. Like, you can go to the chat rooms, you can go to the global news, and you can hit listen. Now you have a live news squawk, and it works great. I mean, it's perfect for me. Right? I don't need to pay $500 a month for something that I didn't really like. I like their updates and everything, but I mean, like, is it worth it when this is, you know, really good as well? All right, we'll take a look here at markets. Just need a little bit of coffee. We're hanging out. 8:30, got some bond options coming in. Hi. 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 You can drop some names, some tickers in the chats if you guys want us to pull individual stocks up. Just let me know what stock, maybe what time frame too as well. What's up, Tony? What's up, Eternity? So Alina, it's you get the Fed interest rate decision at 2 p.m., but the press conference is at 2:30. So it's 30 minutes after. So you get the decision and you get what exactly his speech is going to be. 30 minutes later, he says that speech, but then also answers questions. That makes sense. Okay. Got to do coin. We got to look at the coin. Google's on my screen right now. Let's just talk for a second about Google. This was like, this was just, I love these setups. Like, I just love them, right? So if you happen to be in the Discord, even not, I think we talked about this on our regular videos too. The original post of it was, when did I post Google? $6:30 in the morning on October 23rd, which is like over here or over here. And the reason why was because, these type of setups, like if you see this, like just be prepared next time. If it doesn't matter the stock, like pretend this is ticker symbol XL, whatever, it doesn't matter. I'm trying to think of like a ticker symbol. I'm like, it's Google. So in short, right, when I sort of started looking at it, right, obviously you get a lot of volatility. And then the market came back up. And what do you notice here as far as trends go, right? That's an important thing to look at is trends. And the larger term trend, every time I start talking, the 200-day is the larger term trend, right? And that's still sloping up. And then the 50-day, you can see right here, the 50-day, like price came into it, it got above it, oh, congratulations. But it was still actually declining, right? And then all of a sudden it started curving and turning sideways because it started averaging out data from the past in the more recent 50 bars of data. So it starts flattening out as price actions above it. These are the auctions, by the way. So, and then after that point, you have the larger term trend up. You have the medium term trend, which is starting to flatten out and neutralize after being in a decline. And then you have the 20-day, obviously, is much shorter term and it's holding. But beside all that, then you have price action that's coiling up, right? It's getting tight, right? You have an expansionary move, and then price action's getting tighter here. So these type of setups, they make so much sense. You have a breakout, right? It breaks out of this contraction. You can have a small level of risk. It may break out further, it may not. The problem is you have earnings, okay? So some people don't like to trade into earnings. I personally don't. Now, if I miss the earnings move, I'm okay with that, right? Because I look for consolidations. And then once again, we have to talk about what happened here. Like, so price action, this is, it just set up so perfectly for a good trade. That's all that this was. It doesn't always play out like this, but this is what I would like to see. You get a big earnings move, it comes back, it pulls in, right? It looked good right over here, and then it consolidated a little bit more, it got a little bit tighter, right? But it held the prior area that it broke out in as it filled that earnings gap. And it was kind of coming in on what? Declining volume. So you get this explosive move, price comes back in, and it just sets up like a very, very positive risk to reward, right? While the trend's also turning more into your favor. So this was just like a no-brainer trade. And if you manage to take that trade, congratulations. If you're still in it, these are the type of things where, I've scaled out of my position. I scaled out a little bit yesterday. I scaled out a little bit more just recently. And then I just update my stop and I just let some go. And you might be thinking, well, why not just add to it or whatever the case is. I will add if it sets back up. But the reason why I typically take some off is because the volatility of the trade was set for this amount, right? If I lose it, I lose this amount. So you get this explosive move, volatility increases, and the only way that I can really reduce some of that volatility in my portfolio to really kind of smooth out the P&L curve is by reducing into that. It's still keeping a position, but reducing some of that exposure. Okay, let's take a look at the markets because I don't know why I went into Google. I think it was just because it was on my screen. Okay, let's take an update look at the daily expected moves. Those tariff talks makes me wonder if that's the reason, if that's the narrative behind the dollar of the dollar run up leading into this, is the dollar pricing in a Trump presidency. And my thought behind kind of that was just the thought there was simply, why is the dollar going straight up the entire time into the elections, right? And my only thought process here is we'll get the narrative after the fact, and I still don't know if that's the narrative or not, but I mean that's it makes sense, so we'll see. That was what that live note was about, was tariffs. Okay, so the daily expected moves for today for the SPY, we see these zones up here. We have not tagged it. Prior day, we started outside of it, and then we went further, right? When the market's wrong, the market has to adjust for that. And the same thing with getting outside the weekly expected move. You get outside of the weekly expected move enough, this is the type of stuff that happens. You get significant buying pressure into buying pressure into buying pressure because the market got it completely wrong as far as risk goes. Now, the higher probability is always to come back into this move, right? That's the higher probability. And we still have today and we still have tomorrow. So would that be crazy if that happened? In my opinion, no. So what I prefer to see take place is periods of digestion. Now, once you get a strong move like this, like we discussed on last night's brief, that nobody watched, like almost nobody, is you typically get follow through. So when I say that the higher probability is to come down into here, I don't initiate a trade like that. If I were to initiate a trade, it would look a lot different probably than most people's. It would be like, okay, if I think the market's going to come down, it might be like, and I don't even trade options, but maybe like a very shorter term option that has very defined risk or a risk spread, but it's not going to be 80% of my portfolio going short right now, because the strength is just too powerful. And I'd rather just not. And and I'm not doing that, by the way, but what I did do, because I understand the probability of that, is I just reduce risk. I just reduce risk. When we're above a rising 5-day moving average, I look to buy. Now, I don't look to buy right here, right? I don't look to initiate a new trade. Now I'm looking to add back in on pullbacks. Right? More specifically, the pullback has to show strength after the fact. Okay. I got pretty lucky with the market, how the market kind of played out going into the election, and I'll explain why. I got lucky because the strength of that day leading into it got us back above the 5-day moving average, and it got us back into positive gamma territory. It got us back above this flip line. Okay, and immediately when that happens, you got to start thinking now, okay, if we're going to hold in positive gamma territory, okay, if we're above a rising 5-day moving average, this tells us that the shorter term trend could be turning back. And it means also that dealers are going to start buying the dip again. Volatility is going to come in. But there was other things going on at that time that really kind of made me say, yeah, it's time now to start adding exposure back into the market. And one of those things happened to be what we shared leading into the presidential election. The chart it's just simply looking at back month volatility versus front month, right? We talk about volatility, we look at the curve, and a cool way to look at this is looking at just a ratio of back month versus front month volatility. And if you go back to the little video, right, and you could use this, on your next time it gets to an extreme level, what it looks like is this. Right? This is back month versus front month volatility. It's you create the chart yourself. I'm looking at VXV over VIX. That's 3-month volatility over the current contract, which is just VIX, right? Boom, VIX. So VXV over VIX. And from looking back through history, right, you can see that when we get extended, when back month, sorry. So, okay, looking back through history, when we see front month leading back month volatility, give me a second here. I'm getting a message. 1 second. Okay. When you get front month leading back month volatility, it's telling us that there's more risk right now in the markets. Now, when you look at the ratio curve, when it's like below 1, you can go back. Like, so in August, remember in August, at the very beginning of August, where we just came crack, 3 days down. I happened to be on vacation. During that time, we came into a quarterly expected move and basically said like, yeah, so now what we do is if you're a longer term investor, these are the type of levels that you can pretty much add to. But if you want to be patient, we start to look for, follow through days or things like that. But then we also looked at back month versus front month volatility and how it came down to 0.88, which is extreme. Like, it's an extreme print. You'd have to go back towards like the pandemic days to see a print this low. So when you get these extended moves like this in the market and you look at back month versus front month and you see that, you're like, okay, well, we can probably bounce from here. Now, just because we can bounce doesn't mean that the market's going to do this, right? It could have done this, boom, 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 right? We don't know, but this is just adding layers to your analysis. So in recent trade, we had the back month versus front month going into the presidential campaign down here, below 1. And you pair this with some breadth indicators like bullish percent index charts for the SPX. And those were in oversold conditions, right? So you have back month versus front month. You have the bullish percent charts that are oversold conditions. Everything basically said right there, at bare minimum, don't short. That's like, it very quickly. It says, if you got shorts on, probably cover a little bit here, right? As the market pulled in, in an overall uptrend. But then more importantly, it says you could be potentially in for a bounce. And this right here, I mean, it looked bullish down here, and now we're seeing expand. So the reason I'm pointing this out is because on the flip side to this, when the market starts to press up back up here, not the market, sorry, back month versus front month, you can start getting back above 20%, and you can extend past 20%. But if you look through history, when you start getting pretty extreme levels, periods of consolidation or pullbacks take place, right? So right here, little pullbacks. It doesn't mean it can't go back up, but just know that you typically, and even right here, so the most recent times were right here. It was like right here, you get a little bit of a pullback. Right here, not even really a pullback. It kind of went higher, but then it consolidated and kind of pulled back in a little bit, okay? So understanding that curve can potentially help you as just another layer of analysis for your portfolio. You're probably right, C. My thumbnail was different. I just had somebody throw it together for me because I was like, dude, because I couldn't do it. I recorded my video and I had to have somebody random like just help me. I was like, dude, can you do this for me? And they don't go through charts and like know how to do all that stuff. So I was just like, it is what it is. Maybe you're right. But also, if you notice, see, when I started mentioning the presidential election, like it went from normal views and then all of a sudden it went down. And then it's funny because I use like the presidential candidates' names in the tags, and all of a sudden the views dropped off. And I find that funny because when the Joe Rogan podcast came out with Trump, I like went on YouTube to like search for it and I couldn't find the damn thing. Like, it was the weirdest thing. I don't know if it's still like that or not, but I literally searched, and Joe Rogan's podcast is gigantic, right? I don't even know if it's on YouTube or on how to find it because I don't listen to too many things, but yeah, I went on there and I like searched like Joe Rogan Trump podcast or whatever, and it wasn't there. I couldn't find it. I had to go on Twitter to find a link to it. It was very weird. So I don't know what's going on, but I got to stop mentioning any sort of presidential names apparently on YouTube. because that's the only real different thing other than what you just mentioned, my thumbnail. It was just strange. You had to go to Joe Rogan's channel to find it. Yeah, I see. I don't know. It was very weird. So I don't know. Maybe that's what's causing it. Maybe it's not. Like I said, I don't know. But that's okay. Let's take a look here. I'm going to take a look at the couple of chats here, and then we're going to go back into the markets, kind of see what's going on. Okay. The Google gods are censoring. Put my face on the photo. Mike. Hi. What's up, JTI? JRE Experiment. That's the name of the channel. Maybe that's why I couldn't find it, because I didn't type that in. That could be it. I think I just typed in Joe's name. Joe. Joseph Rogan. You're welcome, Mark Fisher. It was suggested on your homepage, Exotic. See, man, I don't know what's going on. It's weird. Definitely wasn't on mine. I had to look everywhere for it. And actually, somebody from the Discord community, Trader Joe, posted it out on his Twitter, and that's how I found it. Because I follow him, and I was like going through, and I'm like, finally, somebody posted the link. I couldn't find it. It's so funny. Got the fear factor version. All right, people. We're up here at a zero date level, 59.75. 59.75. This is SPX 500 USD chart that I'm looking at. You can look at SPX by CBOE. It'll be a little bit different in price. Not by much, but it will be. All right. So we're above that 59.50. And we're not too far off 6,000. I feel like the market's going to get there. Like, back when we were talking about it, over here before the the presidential stuff happened, we were getting hung up where? The big level was, I wish one of you guys, if somebody could point out the video that I stated this, because I looked through it because I wanted to clip it just to reiterate it. But basically what I was saying was the market was stuck at 59.50, and I said anything above 58.50, which is right where this blue line is, I'd say I'd be bullish above it, and below it, I'd be significantly more cautious. And what I wanted to see was basically, what I said was, what I would like to see is some sort of a shakeout, maybe move into negative gamma territory, and then go for 6,000. Like scare some people out, and then make a run. And it's just crazy because it is what happened. And I know I said it, and I went through some videos. I'm like, was it on a live stream? Was it on a video? I can't remember. But here's the facts. Traders been reaching out for 6,000. That's nothing new. That's what's been going on. That's why we said it, okay? That was why we came up with the narrative of that, is because that's what traders were doing. They're like saying, hey, here's 6,000. We're going for it. And then we had a key level 58.50 that, where was it, 58.50? It was right here. And we basically said, there's not much below it. So if we start getting below 58.50, just be more cautionary down here because there's nothing down here at the time. This is also current. And that's kind of how we came up with that. Now, if we give an update on this, the market's still at 6,000. Like that's where people are reaching out to. And if you remember the JPM collar, it's the upside part of the collar, I think is at like 60-20. You'd have to go verify that and double check, but I'm pretty sure it's 60-20. So if the market comes up here, not only is that where traders are kind of just going to be potentially pinned at, but then you have the JPM collar too. And you might be like, well, why is that important? Well, just Google the JPM collar and its significance to the market. It's a huge order. All right. And it could cap upside in the markets because the market's going to have to hedge some of that off if the market comes up there. Okay. It doesn't mean, and by the way, this is a quarterly, okay, so the JPM collar is a quarter, they place it every quarter, right? Once a quarter. So at the end of the quarter, they're gonna place it again, and we can like visually see it when that happens if you're watching the options chain. And last time it happened was wild because as soon as they hit the tape, the markets went crazy. Okay? So I would think that, if we get up into these areas and we can expand past it, right? The market, because who knows what the market's going to interpret it when we get up here and what's going to come out after that point, what the Fed's going to do. But I would say just from a gamma perspective, what it's telling me, and from the JPM color, the gamma levels right now, it's telling me that 6,000 could kind of be that blockage point, right? Doesn't mean that it's going to come up and reject, but what I mean is it's going to potentially do exactly what it did at 58.50, right? So let's go to 58.50. Boom, boom. Okay, before we saw all this, right, this was 58.50. And just take a look how from really the 14th, we started breaking up through it, right? Let me draw out 58.50, boom. And then what do? We start, woohoo, it's going. I knew it's, no, it's coming back. Oh, wait a second. Oh, wait, back. Oh no, Mark, no, wait, never mind. Oh, okay. So this went from half the month, right? From the 14th to the 30th, right? So this is what I mean by like, if we get up to 6,000, we can make it maybe go to 6,020, 6,050, who knows, right? But I would expect it probably some action like that, unless if things change from a structure of gamma as we move into those levels. Okay. $5 super chat. Thank you for that. What's the question here? Let's take a look here. I'd read off the name. I can't obviously read that, but I can read the question. So looking the VIX chart, you just showed SPY have more room to go. You bought some puts today. So looking the VIX chart, you showed the VIX chart. Did I show the VIX chart? I'll pull it up. Okay, so looking at the VIX chart, you just showed SPY has more room to go. So in my opinion, the market's trying to go to 6,000 because that's where they've been reaching for is what I'm saying. Okay. Now, as far as the VIX chart goes, some people use technical analysis on the VIX. Other people laugh at you when you do that or overlay other indicators because it's really just a calculation from the SPX options chain. My thought is this: if it works for you, do whatever you want to do, right? If it actually works and helps you out, then who's to say anything, right? If you got something that works for you, go ahead. But what I like to look at on the VIX is a couple of things. So when we go into negative gamma territory, what the VIX does, and then what happens to the VIX when we get back above the gamma flip line. Boom, and then boom. And that is where I bring this into play. These gray boxes. So these gray boxes are the times that we go into negative gamma territory and we get out of negative gamma territory. So if I look at recent, right? We were in negative gamma territory, negative gamma territory, negative gamma territory. Outside of negative gamma territory, we went to positive, which means what? It means volatility typically comes in. Dealers look to buy the dip and sell the rip. Now, volatility is rather low here. It's at 15% right now. So the implied daily move, once we do the calculation, is going to look obviously a lot different than what it was when it was up here. So yeah, volatility is coming in a bit. Can we see it potentially move higher in the near future? Absolutely. But right now, we're well into negative gamma territory. Positive gamma territory. So the flow is currently to the upside. Yeah. And I would say that we can get hung up there at around 6,000. I feel like we can potentially even make it there today. Like that'd be a pretty big move. But once we get through the Fed, like if the market likes what it sees from the Fed, we're going to 6,000. I feel like that's said and done. If the market doesn't like what the Fed does, okay, then let's take a little bit of a break, a little bit of digestion. But that still doesn't deter from the fact that the trend is currently up. So if you are buying puts, if you're buying puts right now, to fade this strength, hopefully you're doing it against a portfolio to hedge it. Not because you're going net short, right? Because that would be a lot dangerous. Going net short in a very bullish trend, it can work, right? It can work, but let me be very frank in saying, if that is your strategy, there will come times where it doesn't work, and when it doesn't work, it really, really doesn't work good, right? So you really need to have that risk management in place. So for example, like I'm net long, right? I'm net long. I'm usually net long. I don't think I'm ever net short unless I just have a large cash position and whatever, like very rarely now these days. Okay. Maybe a long time ago I'd do something like that. But if I was to be like, yeah, I'm buying puts, I feel like the initial reaction most people would say was, I'm buying puts too. I'm going to go. But what they don't understand is if I tell them that I'm buying puts or I'm shorting the market here, they have no idea what I'm shorting up against. They just know that they think that I'm going to have, they might not understand that I'm just doing it just to mitigate the risk of my long positions, right? That could be this simple, like, and a hedge, by the way, when you hedge your portfolio, in my opinion, a hedge, you do not want your hedge to pay. Because the hedge is a small portion, a very small portion to protect your portfolio. You want your hedge to lose because you want your portfolio to win. Does that make sense? So however you approach this, just approach it with caution because the market right now, is still digesting its recent events. And we still have the Fed around the corner. So, I mean, it's a binary thing that's going to happen. Let's look at market net flow. Market net flow right now also suggests get out of my way, right? You have the green line that's just been going straight up, basically, right? Trending up higher. Cumulative net premiums for puts are going flat to under zero. And you've been in convergence for the bulk of the day. So this was same thing with yesterday. Market net flow, once you can read this chart, it's not hard to do. I can break it down if you guys want me to break it down again. But market net flow, you don't want to fight market net flow. If you fight it for the day, right? This is intraday. You can look at multiple days too. But fighting market net flow, it's a losing battle over time because the market is bigger than you. The market will always be bigger than any one of us, right? We're not the market. So using this as a tool to be on the right side of trade really does assist. Now, it doesn't mean it's always going to be right, but if you do this, if you make 100 trades, over the course of 100 trading days, and you're just allowing to be on the right side of market net flow, I feel like that'll dramatically improve your expectancy over that course of that time, if that makes sense. Like market net flow will tell you even when, like, hey, it's going to be a choppy day today, so you probably just shouldn't even touch it. Right now, it's telling me, don't even bother shorting it. Just let the market do its thing. So, or if it's too extended, too long for you, it says, well, just wait, then wait, right? That's what this tells me right now. Or it says, hey, look for pullbacks and potentially buy some dips. From a market net flow perspective, that's what that tells me. Can I be wrong? Absolutely. Absolutely. But remember, it's not about being right for the day. Because trading, if you want to be a successful trader, investor, whatever the case is, you can't think so in the day, right? You can't, you got to be, right? Out. You got to be like, I'm doing this forever. I'm going to be trading my account for forever. So what the hell's the rush here today? There is some attention out there at 595 for the SPY. We're coming into the daily expected move right now. And the upper monthly expected move is at 597.58. So the S&P 500 is moving up into and around this area. Hey, what's up, Matt? When's ICT coming? Dude, I don't think he's going to, but I'll be, like I said, I picked this time, 11/11/11. November 11th at 11 a.m. Eastern Standard Time. I said, well, I mean, what's crazy too about the ICT guy is, like, I wasn't even talking to him, and he just hopped into a conversation, right? Because I responded to somebody's comment on him. I didn't even respond directly to him, and then he basically just like made an insult towards me, and then I don't know, I forget exactly what was said. It wasn't even that bad or whatever, and then I responded. And then he basically invited me to a live stream, and I said, okay, cool. So I set up the live stream right away that day. Boom, I'm live. He didn't show up. And then he finally responds way after the live stream's over and says, let's do next week because the election will be hard for you to trade. As he posts, after the election, right, and saying that it's a difficult environment, which is hilarious because my portfolio hit all-time highs. Okay. So then he says, pick a time. I say, Monday, 11 o'clock. He says, okay, perfect. And then he was like, send me the YouTube link. And I was like, what do you mean, send me the YouTube link? I said I have to send you the Zoom invitation, or I have to send you the restream information to get in, and I'm not going to post the password so anybody can hop in and share their screen or their camera. And he's like, oh no, I'm not doing an interview. I'm like, okay, let's not interview each other. Let's just talk markets. And he says, no, monetization. I said, let's turn monetization off. And then he says, well, I can be in the comments doing tick by tick analysis. And then I said, okay, you're familiar with live streaming, right? There's a lag, right? There is a small lag. And I was like, just you do you, man. I was like, you asked me to do a live, and now you're just saying you're going to come into a comment section, and that's the most dumbest thing in the world, right? I've never there is no professional trader out there that's interested in or that has a public view that would say, yeah, I'm going to come, let's do a live stream together, but I'll just be in the comment section. Not a single one, just him. It's crazy. Okay. Matt, dude, you just completely threw me off of what I was talking about. The Len boy, my son's doing good today. No, I'm not heated. You know I'm not heated. Yeah, exactly, AA. Oh yeah, and then Henry from Twitch, he was like, I can't believe he was like giving you a hard time about 46% up year to date. And he was like, that's a day's work. I'm like, what? What do you mean a day's work? And then he's like, you can pick any day, whatever you get, I'm gonna 10x it. I'm like, so if my portfolio goes up 1%, which is, decent. That's crazy good. He'll get 10%. Just to make that stupid of a call, like that right there. And I don't know how that doesn't just red flag people off that've been in this like industry. Like anybody who says that, it's like it's what? What are you talking about? But then he doesn't show any. He doesn't prove himself by anything. Like, bro, I guarantee you that if I studied ICT methodologies, I can probably make it work totally fine. But never in my life will I be like, this predicts everything. Now I know the inside of the market and how it operates by looking at a candlestick chart. All right? The strategy is, dude, it's like this big. Like your strategy is important, but your position sizing is like your risk management principles are so much more important. Your psychology of when to enter, when to exit. When things are flying at you 100 miles an hour, are you going to bail or are you going to stick to your process? Determining market conditions, when that strategy is going to work best. Not just sitting there saying, I'm going to make a call by call analysis. Like, who cares if you're right or wrong? Because no matter what, you're going to be wrong and you're going to be right. I can literally close my eyes right now and turn up to the sky and I can just type in a random ticker and be like, go long. And I could turn around and I could say, now sell. And then I could be right. If I do that 10 times, I'm going to be right at least a couple of times. And if I just took the time that I was right, I'd be like, see? Okay. Magic. What's up, trader? What's up, Ricket? How you doing, man? Okay, I'm gonna take a look here at Twitch comments, just making sure if the Fed is going to be hawkish or dovish. Oh man, that's a good question. What do I think the Fed's gonna do? I think the Fed's gonna cut, right? And then what is he going to, like, I think that the questions need to be asked. I think the questions that are asked to the Fed, I think we have to really hone in on what because I mean, look at the bond market. Look at what the bond market did. Let me just show you. Like, this is a slap in Jerome's face. He came in and cut, and then the 10-year yield, right? Obviously, the shorter end is what moves closer to the Fed, but the 10-year yield skyrockets. It just rips in the face of that. And these are the rates that really do matter to us, right? This is what's tied to your mortgage. I get that you use the 30-year fix or whatever, but the correlation between this and mortgage rates, it's uncanny, right? It's a strong positive correlation. So I think that people should probably come in there and be asking, like, what are his thoughts around this and how he plans to approach this if the market's going to be pricing in higher inflation, right? Some of these reports are looking like, as if they were like, I would be surprised if somebody brought up the 1970s, right? Because of how inflation came off significantly and then all of a sudden, boom, picked right back up. So I feel like there has to be some tough questions asked here. And why exactly are they cutting, and if they believe that it's too soon? Because of how the market responded pretty much instantaneously. So I think he's always going to lean more on the side of dovish, at least right now, because the error for margin of error is getting smaller and smaller. But we'll see, right? I really don't know. It's a binary event, and I just let the market do its thing. I just let the market do its thing, and if something opens up, I'll take a trade. It's as simple as that. I've made 0 day trades today. I don't really day trade too much anymore, just because I focus more on my larger portfolios. I mean, that's just it. If something opens up, maybe I'll put on a trade, and even then, if I put on the trade, I'm like, I'll probably scale out of it, but I'll probably hope to keep it in on a swing trade. Yeah, exactly, Roger. I mean, yeah, the 10-year yield's incredibly important. It's important to us. It's important to businesses, right? I get that the Federal Reserve is lowering rates, and that's like stimulative. I mean, that's the tightening, or we've been in a tightening cycle. Now we're supposedly, when you cut rates, right? Now we're moving into like the easing cycle, but it feels like liquidity has been there the entire time. Okay, so the market's coming off slightly over here. We've reached up to the daily expected move, just into and around this area. Now we're seeing a little bit of a pullback. Market net flow still rather bullish. You're seeing the cumulative net premiums for puts start to kind of move up slightly, but it's still below zero. That 595 area was the magnet, and then 594. I'd be paying attention for a drop down to 594. If we start to get more pressure down to 594, that could potentially be one of those like, hey, areas where you might think like, maybe this would be the dip. I'll draw in a little properties. I don't know if it's going to reach down here or not. We'll go 594. But that's what the 0 date levels are telling me just right here, right now. I'm going to actually move it out a little bit more like this. Let me go properties, and we'll go 594, and we'll come back to it if price gets to it, and we'll see how price responds. Okay, so the reason why I say this 594 is because if you go over to Trading Ticks and you look over here, right, I'm looking at the 0 date gamma exposure levels, and I go to buy change to see if anything changes dramatically. And red, in short, red lines will magnetize price, or has the ability to magnetize price, so act like a magnet. Green will be more of a repellent. So if price does come down to 594, perhaps it repels from that level back up. Okay. Tom Lee's looking like a prophet this year. Hey, man, if anybody that just calls things that are bullish, you're going to look like a prophet pretty much all the time, because the market does typically just go higher. But every once in a while, when you get some volatility, like you look dumb for a little bit, but then it corrects itself. There will come a time where it's a lot different, right? I mean, for example, ARK Fund, Cathie Woods, right? Cathie Woods was, and by the way, let's pull up ARK because ARK I traded, and ARK, right? If we're talking in terms of she was, the holy grail of traders and everything. She was on every news station. She was, she's the best, right? She was the best because of how, but was she the best, or was she a product of the bazooka that the Fed dropped into the markets after the pandemic? I'll leave that up for you to determine. I mean, I guess you got to only really know this stuff through time, but I would say that all the excitement was probably has to do with the Fed bazooka, because look what happened. Nothing around her things changed, but it came completely back down. But if you're thinking about this in terms of just the 4 stages of the stock market structure, stage 1, accumulation, markup, distribution, decline. I mean, this is clear as day. That's exactly what happened. You even got the over climactic shot over here. It's pretty wild. But if this is, Is Cathie Wood's going to make a comeback? Because are we moving into a potentially accumulation to a markup phase here? And my thought was like, okay, well, there's a good chance that this is going to be the case because the 200-day is flattening out to turning up. We're starting to see pockets of good volumes. We started tightening up over here. We saw a series of higher lows. So I thought maybe if we break this, area, it shoots us up back up to around 54 to go try out this prior swing high and try to get positive for the year. Because it's down on the year, right? We closed up here, so it's still down on the year. But yeah, so I traded this. I scaled out a lot of the position, but now I'd be looking to re-add in, seeing if it does something like this, sets back up, and these averages start to catch back up again over time. Or if it comes in a little bit, I would prefer this. This just like boom, shake out some people, and then set something like that up, and then just take it into 2025. That would be sweet. But I don't know if that's going to be the case. For all we know, it's going to go straight up, right? I don't know. But overall, if I look at the weekly time frame, I mean, look at that. Sweet, right? I love it. Nice big breakout. You can look at something like XRT. So on a prior video, about 4 videos ago, I talked about XRT. And it doodled around, right? But what I liked about it was just simply that, one, we broke out of this accumulation. Is this the early stage of a markup? And is this the first base of a markup phase? Is this the first base in the markup? And what I mean by that is if you go into a stage 2 markup, you typically can have 3 or 4 bases. It starts off pretty large, then it moves up quickly, has a little bit smaller of a base, and then so forth. And when it gets up to like the 4th, 5th base, things can move into like a more distributive distribution where it starts getting a little bit more shaky. But that's my thought here on the weekly time frame for XRT. I also showed, I think it was called XTN. I'll pull up the video if you guys want to see which one it was. Yeah, look at this, boom, look at. So XTN was transports, and my thought here was simply, is the market, so transports, one of the biggest expenses is oil, and my thought was, okay, if a presidential candidate gets into place that is for fracking, for lower cost energy, or starts putting things into place for that, can we see transports potentially lift off? Because the cost of some of their, largest expenses could potentially be going down. Very simple thought process, but if I didn't even think about that, I was looking at it like this. You see the higher lows, it was getting back above the 40-week, 30-week, the 10-week, it was getting tight right here, and boom, we get this explosive move on the weekly time frame, and even the daily time frame, bam. So now I would be putting XTN or various holdings within XTN on the radar for potentially flagging out, consolidating, and then looking to play it back up to see if we can get some more price action to the upside. Like I said, we don't know if that's going to be the case, but strength begets strength typically, right? Strong stocks typically get stronger. So instead of buying the tops, look for the consolidations, look for the risks to minimize, and then you execute. And when you're right big. And when you're wrong, you know where you're going to be wrong at. You just got to be able to maintain a level-headed, emotional stance and not like go crazy on one stock, right? And then all of a sudden be like, okay, now I'm going to take it easy. And when you take it easy, then that stock goes in your favor. And then you go back to your next thing and you're like, okay, now I feel confident again. I'm going to go push it even harder. And all of a sudden that one goes down. And it's like, you got to be consistent with how you approach it all. So yeah, it was XTN, XRT, and ARC that we talked about like 4 or 5 videos ago there. I think Cathie Woods did sell Tesla not that long ago, Red. But I think, so she has more than one fund. And I think a lot of people forget that. Like ARKK is like the flagship. But I think if I remember correctly, some of her other funds still held, or maybe I'm thinking Nvidia. She got rid of Nvidia from ARC or something like that. I don't know. She like what we've seen is, dude, she just buys at the worst time possible that we've seen. But we don't know, man. That can potentially change. That could potentially change here. So we didn't come down to this 594, but price is still holding up strong, right? The market net flow is pretty strong. I'm going to go ahead and leave this chart up. I'm going to get a little bit more water Do I need more coffee? Oh, coffee's good. Thoughts on Reddit? We can pull that up. Drop some tickers in the chat. We'll go over some various names. You bought some TMF at 45. Hey, Jossie Nunez. I'm glad that the indicator for Thinkorswim is helping you out. It was, which one? Which one are you talking about? Are you talking about the trend changer or the IVOL bands? The trend changer, I just coded because I saw Brian Shannon post a picture of his stuff, and he didn't give out the script. I think he gives it out to his subscribers or whatever. But it was like, it's so simple to make that, so I just made it myself, and am using it. I don't think he'd be mad at that. And by the way, it's not like a signal chart that it just literally just helps visualize things. And the thing why I really like it is because I talk about it frequently, right? I love talking about it, but if I'm talking about it, it's a lot easier to read and see what I'm trying to say if there's colors on the screen. Yes, okay, yeah, the trend changer one is what you're talking about. Yep, that's this one right here. Right here. All right, we go to SPY. Boom. There you go. Green. Green go. It's very extended here. Look at this thing. I mean, extended could be extended for a while, but this thing has been kind of just like these trends don't hold, right? These type of angles do not hold for long. So you get these like blow off moves, and then it'll come in, and then you'll see more volatility. It'll digest, it'll calm down, right? Incredible move though on SPY. Qs, everything. We're gonna look at we'll take a look at what it will impact the market as far as the Fed stuff goes. I'll relook into the implied move, what it's pricing in. We'll talk about that. We'll talk about individual names. We'll talk about some of the larger market cap names. Market net flow is still bullish. Do you see how this changed quite a bit? Actually, the structure of this changed. Look at this. They're reaching up to they're reaching up to 600. 590, 600. So this did change. Let's take a look at the total. Yeah, it's just bullish, man. It's just like this is why I say you don't really want to fight the tape necessarily, right? And just look for pullbacks right now, right? Like we can wake up tomorrow, or the Fed can come out and goes blah, and you're like, oh man, I should have bought puts. If you buy puts, or if you're shorting a strong market, make sure you're paying attention to your management of risk. All right, I'll be right back. Okay, give me 1 second. Yeah, PC, we can pull all that stuff up. We'll look at that. Give me a moment. I'll be back. All right, we back. Oh, of course I'm getting a phone call as soon as I sit down. Give me a second. Spam calls. Did Coco come up here? Did Coco take over my computer again? Oh, yeah. No, it's not that button. Not again. Okay. All right, give me a second. Give me a second here. Okay. All right, let me check chats, make sure everything's good. Coco longed. A monkey bought a 2020 bottom and would look like a genius. Yeah, seriously though. Everyone's a genius when price goes in one direction, right? It's kind of what's been going on here. Yeah, I wonder if the Santa Claus rally, if this is the Santa Claus rally. Seasonality hasn't really been following too well this year. So I am interested because we are moving into that, that main area of interest, that JPM collar and so forth. So, yeah, I don't know. All right, we'll take a look at some of those names. Give me one more moment here. Just checking Twitter. Got a lot of people that view on Twitter, but they're not active as far as chatting goes. And I think it's because you can kind of just have it on. But I am every once in a while going into that chat and checking. Okay. This is not a daily live show, at least not right now. I'll be more consistent once I figure things out with raising a kid. Kind of hard to like set these pure schedules up because just of how me, my wife's, and now my son's schedule kind of operates. It's been very hard to do this. So if I do like a daily operation, it's going to be very like to the button, 30 minutes, 40 minutes, and it'll have to be super early in the morning, which would probably be better because it'll be during the market open and so forth to get a good idea on the markets. But unfortunately, that's like, it's just hard to do that, especially being in Pacific Standard Time. Twitter's 99% bots. Might be. It might be. Yeah, let's take a look at IWM. We'll look at Qs, and then we'll pull up the Mag 7. All right, IWM, it's quite literally just digesting its move from the other day. So we saw explosive move. I went ahead and anchored to the low of the trading session, and we're still holding above the PWAP, presidential weighted average price. And as far as the daily moves go, we could still be down here or we can still be up here. But right now it is literally just consolidating. We can go over and go into the daily time frame. Pull up IWM. I'm going to remove the eyeball bands. And you can see that we broke out, nice big breakout. So now I'd be watching for consolidations. This is one that we talked about for IWM. We talked about how we saw a series of higher lows. We talked about how it was consolidating here. And I mean, even how it flagged out over here, right? It consolidated again. This right here is just perfect structure as it's kind of breaking into and around this prior area of supply. And this is what happens. You sometimes just get, it doesn't cross through nice and easily. It kind of comes out, fakes you out, and then goes for its explosive move. But if you were have traded this and you just said, I'm going to trade the breakout, your stop probably would have been down here, right? So yeah, it would come in, you'd be like, oh, that sucks. Oh, okay. But and then if you would just stayed in it, I mean, you'd be up here now, right? So look at just this is how things play out sometimes. Sometimes it takes a while for things to get going, but what led us to believe that you'd want to be more, leaning more bullish on a chart like this? It was the series of higher lows. It was the tight price action to offer up a better risk, to potential better reward, and it was building them into a pivot area that was fairly clear. So there's IWM. Let's take a look at the Qs. So Qs have reached into its November monthly expected move, and Qs are currently outside of their daily implied move. So simply put, we're way outside of the weekly expected move. We're already at the upper monthly expected move. It's the 7th. So yeah, things on the Qs side, so in tech space, probably a little frothy here. So I would definitely not be looking to start a new position here. Even if it goes up higher, I would still look then for the consolidations to take place thereafter, right? I would want the 5-day moving average, which is way down here, to catch up. I'd want price to go sideways, base out, build something, and then go from there. But yeah, as far as Qs go, pretty darn frothy. So we'll hop into the individual names for Qs. Now this is where it gets interesting. If I go to the daily time frame, right, we just hit new highs. If I zoom out, this right here is actually quite nice. So this is where you really want to kind of be prepared for potential moves. Let me go ahead and draw this green so you can see. But we saw the series of, let me actually pull up volume here too. So earlier in the show, we talked about follow-through days, right? After the August volatility, this was the first follow-through day right here. A follow-through day is a day that's up 1.2% or higher on the S&P 500, even more, a little bit more on the Qs, with higher volume than the day prior. So this is where we started saying, yeah, now you want to, now no matter what, you want to get exposure back into the markets, because you've never had a correction in the markets or bear market correct itself and start getting out of that territory without a follow-through day. So you look now. It doesn't mean that a follow-through day equals that it's going to play out, but what it means is, simply put, when there is a follow-through day, pay attention to it, right? That's just from William O'Neill, William O'Neill's research. So I always look for that stuff after big sell-offs. Okay, so then we saw the series of higher lows, right, building into this prior area supply. And, even in around these areas over here, we started noticing things like, from a cycle perspective, how it was we're coming into a period in time where it looks like we're going to go to an economic contraction. And the thought process here was looking at that, like, let me see if I can pull that up again. Sector analysis, relative, no, not relative, sector analysis, rotation. Yeah. Boom. So this chart right here, what we were pointing out a while ago was consumer staples, utilities, healthcare, right? Financials. This is what was leading the market. And in fact, I mean, it's still kind of that way. Like, look at what financials did the other day. Financials went, when do you see financials up 6% on a trading session? Seriously. I don't know. Let me go rate of change. Let me see, let's see the time. Like, let's go see when we saw a 1-day move of 6% in something like the XLF. Let's go back. I mean, I would imagine it had to be during the most heated, volatile moments to see something like that. Let me go. Oh, that's max available. Okay. Bam, right here. Okay, so this is very similar to KRE. So the last time we saw a move like this is very similar to KRE. You go back to November. I find that so funny. Like, look at, it was November 9th. It's November 7th right now, right? Of 2020. And then what happened? It actually ended up rallying quite nicely. So I don't know, are we going to have the very same situation take place? The difference between over here, right, 2020, and where we are now is, what did we have supporting these moves in the market? The Fed. Hey guys, congratulations. Yes, 6,000. Boom. Thanks, Vincent. Hey, thanks, Vinny. My boy loves, by the way, Vinny from Patreon, right? Just to make sure. I'll make sure I'm talking to the same person. Yeah, I think it is you. Yeah. My boy loves that. Absolutely loves those toys. Yeah, thanks again, Vinny. He's every single day pressing that button on the truck and then playing with a little laptop. It's hilarious. Okay, where was I? Sorry, where was I? So ES reaching up to 6,000. Awesome. I forget where I was. I think I was just talking about like the markets, kind of just how high they were, or what happened after a move like that in financials. But going back to the, sorry, I think I was talking about this right here. But okay, so when we were talking about that over here, like it says basically, oh, you know, the stock market is kind of turning, but we could be near the top and going into an early recession. And maybe that's still the case because financials are still the overperformer here. But my thought was, if that's not the case, when we're just moving through this sector kind of rotation, which I mean, energies performed really well, then it was all of this, right? We pulled it up from a year-to-date basis, then a 3-month perspective, and all these were the top performers. But my thought process was, if we keep moving through this, this right here is going to be where the opportunity is. Tech, discretionary, and so forth. And I mean, now look at tech, right? So when you look at it from just a absolute basis, from a candlestick perspective, you go back in here and you're like, yep, that looks pretty good, right? That was the opportunity when people were, freaking out by this little undercut over here. Shoo, right? We started moving up, and you can even say that when we broke from here. And I think what we were looking at the time was this kind of a consolidation pattern and where it can lead to, right? So let's draw that out. Let's show once again where would be the measured move for something like that for the Qs. So it would look like this, right? Just a little pennant or whatever. So there's your pennant or your triangle, or I don't really care what you call it. It's just showing price that's contracting. Then I went ahead and you can just draw, the kind of the whitest part of it. And then you look for the breakout and it puts you north of like 550, right? So a measured move of just this little candlestick pattern, which, use measured moves, don't use measured moves, it doesn't matter. But a measured move would be just taking this and then measuring from the breakout area up. So that would be 550. If I go over to SPY, right, we talked about this pattern here, how we were getting kind of this kind of cupping pattern. And what would that entail as far as a potential measured move? So what we did was you go like this and you go to the breakout area and then you measure it up from there. And that was like 620-ish, I believe. Yeah, like 620. So just a measured move from this base, like, right, if we're just talking in terms of technical analysis, right, this little cup handle pattern. There's the cup, there's the handle. It would be a measured move up north towards 620. And surprisingly enough, 620 or 6,020 on the SPX, that's what the JPM caller was, right? 6,020. That was like the upper bounds of it. All right. Let's look here at the Qs. The Qs are just dancing around its upper monthly expected move. We're outside of the daily I-vol band and the daily implied move. I would say it'd probably be important to just watch the anchor volume weighted average price here. So if price comes back in and it's going to remain bullish, perhaps it comes back into this and then tries to break back above, or just be more cautious if it does break down from this. But right now, it's holding up rather well. Executable to make a trade, maybe in individual names, but I still would just be kind of on digestion mode. Let's look at Nvidia. Nvidia is now the #1 company in the, as far as market cap goes. And I mean, it's been the most important company also from a volatility perspective, implied volatility perspective. It is now the largest market cap names by a decent margin, $3.6 trillion, people. Apple is at 3.4 trillion. Trillion with a T. Crazy. Nvidia is hitting new highs today, breaking out of its contraction pattern, right? Over here, it started getting tight within this, pulled back, boom, we started seeing consolidation and breaking through. So what would be a measured move for something like this? Just a measured move could bring us up to around 175. I know that's hard to believe, but I mean, there's nothing to say that it can't get there, right? Strong stocks typically get stronger. How it gets there, I don't really know. And would I chase right here? Probably not. We do have earnings. Earnings could get it there. Earnings for sure can get it there. Right? If I go to, when is earnings? Earnings for Nvidia, 11:20. So go to the trade tab. We'll go out to 11:22, the weekly expiration. And we're looking at a $15 expected move right now. Right? We don't know where it's going to be then, but yeah, $15 from where we currently are would bring us up darn near there. So we'll see. Okay, so there's Nvidia, still looking very, very strong. Honestly, it just keeps pressing. You get these little consolidations on the 15-minute time frame above a rising 5-day moving average. Strong. I mean, I just wouldn't short this stuff. I just wouldn't. Why would I? I would not waste my time trying to short this stuff. Apple came into its, this was its last week's weekly expected move. And you can see it just started doodling in and around there. This was the earnings expected move. We didn't even come towards it. And now Apple is starting to get back above its 5-day moving average. So now with Apple potentially seeing this change in trend, I would want to see this to start flying down and turning up, which it will if price stays up here. But what I'd prefer to see is Apple now to kind of consolidate, to move sideways a little bit, to scare people out, whatever, and this to turn back up, and then execute into Apple to go higher up to and around 234. Is that going to be the case? Many times in these type of environments, you do just go, 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 and you get these the lockout rally, and it is what it is. Like, who cares? Like, okay, so I know people do care. I don't care. I don't care about being locked out of a rally. I just wait for the digestion, because whether I trade it from here to here, or from here to here, or from here to, way up here, to me, it just doesn't matter. I don't let it really bother me. And what I for sure don't do is, if all of them are going long, I'm going to fight it. And I'm gonna, hopefully, I'm going to get it, I'm going to take the opposite side of the trade. Also something that I probably did in the past. And I don't do that anymore. And if I do approach a very strong fade, it's a small position. Like, it is a very small position. It's just a piece of inventory against everything else. The daily time frame for Apple. Daily time frame for Apple, we're kind of just going sideways here. Take a look. This is actually kind of interesting. Let me just remove this. Oh my gosh. I'll just clear the drawing set. There we go. So on Apple, it's a very similar situation that we've been seeing in a lot of names that have been building these bases, but you get this extravagant kind of like scary move, it comes back in, you get another push back down, a little bit less volatility, a little bit less volatility. You go back up to this prior area supply, bam. And what we're seeing here is we are seeing higher lows. So as we're starting to get back above the 5-day moving average, if it does come in a little bit, or even if it doesn't, your entry could be here, your stop could be there, or even, execute just under the low of the day or the low of the prior trading day. And the thought would simply be, I'm playing for the potential change in trend higher for something like Apple to come back up to 240 and potentially then consolidate and even head higher. I know that's crazy to believe, but that's just what it is, right? Are we going to get there? Who knows? But makes complete sense from a risk perspective. Even if we traded from here to here and saying you wanted to get to here, all right, the risk is not like 1 for 1 over here. But if you just updated the risk up to this low of this day, okay, then the risk management makes up for almost a 2 for 1. And if you go below the low of today's trading session, that definitely, you're talking 3 to 1 risk to rate, like reward 3 for 1 risk. The problem with these higher reward to risks and lower, like very small stopping points here is you are dealing with a more probabilities of getting stopped out more frequently. So if you go like something like this, where it goes up higher, right, and you're playing for a larger breakout, your probabilities increase a little bit if trend starts really does picking up. So either way you look at it, I would prefer to see price come in a little bit, digest, and then play into something like Apple. Microsoft also, so here we're seeing a very nice move, and it's kind of pulling in a little bit. It's starting to digest a little bit. The 5-day moving average is turning around. You go to the daily time frame, and it's been chopping around. I mean, you can't really analyze this one that much. Like, what was this? Boom, earnings down. Boom, we're following through, getting back above some of these averages. Look at the averages. Look how tight they are. The trend right here, what this tells me, there is no trend. And you could see that literally in price. So if I were to draw like maybe something like this, then people would be like, oh, okay. That's so many lines right there. So let me just clear this drawing set. Right? You could do something like this. I don't know. It's undercutting some of them and overcutting, but the scheme of the thing is you can see price is technically contracting, right? Big, smaller, smaller. And now we're coming back into kind of in and around this range, right? So even if it breaks out further, maybe it stops, like does something like this and then sets up. And then the trend, right? You get the 20-day moving average to start picking up, the 50-day, and then all of a sudden you start to see the trend break further like this. And then price follows that trend up. So on that note is, if you, like, for example, if you were to play here and this was your level of risk, I mean, you could simply just like, okay, but I'm going to play up to the top right then and there. It's like not the greatest entry in my opinion after this big move, but I'd understand buying into strength and being back above these averages. And you could potentially mitigate your risk, as you see fit if it does continue. But then if you're playing it up to here, it's like, okay, well, now I'm looking at like a 2 for 1 and you can make, here's 1 unit of risk, right? 1 RU. And then you have 1 RU here, risk unit, and another one over here. So for example, if you bought right here and price went up to here, you can literally just move your stop to right here, break even. Or you can remove 50% of your position here and then keep your stop down here. But just understand, if that's the case, then you'd be looking at, if you don't update your stop, this would be your risk, right? This would be your reward. So your risk reward skews as price action changes, right? So price comes up here, then you're like, okay, am I going to hold my full position to get this while risking still all of this? No, you got to just adjust to see what works best for you in those situations, if that was the case. Okay, Google, I've already talked about. Google, this one I traded Google. I was pretty adamant on this one. I posted it like 3 times in Trade Ideas, and I think I even talked about it on our streams and everything, but it was setting up, right? Like this was like just perfect little setup. It was contracting over here. Boom, earnings came. Okay, you missed it. No big deal. It came right back in, set right back up for a potential move, and it did follow through. So those are the type of moves that I like to see. Meta also just holding strong still. You know, I'm not going to chase into this one as well, but you can see that we're kind of coming into a prior area supply up here at about 600, 603, right around here. So I would just be watching to see how things consolidate. Like this right here was a great consolidation in Meta. All right, and now we're kind of just seeing volatility expand a little bit here. You know, I'd like something like that where the 20-day kind of comes back in, the 50-day catches back up. Obviously, the 200-day is still up, and then potentially play a base breakout. Berkshire. I mean, this is what I mean also about risk to reward, right? If you go back to the video that we talked about over here, I swear to you, I think people were like, yeah, no, like I wouldn't be doing this, right? But look what happened. Boom, we blew through the roof to it. And then you can update risk, whatever. Price came back down significantly, so that probably scares some people out right there. Probably right here on this breakdown. But say if you just did keep that risk, and you wouldn't have got stopped out here at minimum. But what happened? Well, price ended up going higher and then chopping around, right? It got very clean, very tight, and then things just kind of took off. Let's look at Tesla. More importantly, let's look at Tesla from a perspective in a Tesla car. Okay, so Tesla. Also, so these are the setups that I love, right? So first and foremost, if you go back and you just look at the videos of how we once again explain things during the time that they're happening, we talked about how it saw strength right here, right? And how it was consolidating. We talked about how it was tightening up right here, right? And you just manage risk through these periods of time. But then, more importantly, this last time we had earnings. Boom, very bullish earnings move. Price consolidated into a rising 20-day and 50-day. Okay? So these are the type of setups after earnings is out of the way and you get digestion that I look for follow-through. So the more recent ones, like FFIV, I think is one, right? So here's one that I traded. I'm still in. FFIV, earnings, boom, it came out. Price action, consolidated and pulled back in. We had an inside trading day. I took a speculative entry with a stop down here, and it just so happened to play out. So it's not a full-size position, but there you go. AON. AON, boom, you get a big earnings move. Now, this earnings move ended up closing at the low of the day, so you really want to give this one time to digest, but price came in. Where did it come into? Prior area over here. So I was like, okay, well, you can probably have around risk like this, right? Maybe obviously more if you entered later in the day, but then coming back up into this area, it's a good 2-for-1. So this is another one that I managed to get into, and it went in my favor. Not a full-size position, but that was another one that was posted. ISRG. Now, this is where it gets interesting for like healthcare stuff. So ISRG, another one that I traded. Now, I actually got out of the majority of the, not at the right here, but probably a little bit lower where I took some off, but it's still looking strong. You have earnings, it consolidated. It made sense to play a potential little breakout into and around these levels with an ideal amount of risk. All right, but the reason why I actually exited it out of some of my healthcare stuff was just simply because there was a lot of volatility in the healthcare sector. And I just didn't want to be a part of that if there was going to be a big turn. So this was one of them that I just cut. And luckily I did, because I mean, honestly, it came all the way down here and it wouldn't even got below the low here, but that price action in of itself would be a little bit, I'd be skeptic of. And then it started recovering. So it would have been a shakeout regardless. So I managed to take a little bit of profits. Now, if I were to re-enter back in, I'd probably have a stop just under this low, because then your risk here could still play to pretty decent size reward up into and around this area. So it's still a good trade in my opinion, but notice the earnings move, the consolidation, right? And then you look for the follow through and the breakout. So these trades, I just like, I love these trades, right? XBI, another one that has been on the radar. And, oh shoot, I'm still in my Tesla, my bad. I'll pull up Palantir too. Yeah. Okay, so XBI, I mean, look at where we're at. We're back up into the prior area of supply, and look how it got here, right? So it got here very like abruptly in these last couple of trading days. So I would prefer price to calm down. But prior to this, right, on 11/1, what I pointed out was simply that you have a larger structure here, but then inside of this larger structure, you have an early entry because price action was coiling up. It was getting very, very tight here, okay? And when price action gets very tight, it offers up a good risk to reward. And knowing that it's a bigger structure and an earlier entry, you can get better entries. And if it sets back up, you can always re-add in or add more to your position or partial profits, and then look to add in if we start to break out further. So XBI looks real good right here, even if it were to come back in. Actually, if it were to come back in, I mean, I would be once again on deck, ready to go if it does something like that. Because the goal here would be for these higher lows in this pivot area to eventually break out of this base and go for it. And that's what I want to be a part of, right? But I want to make sure that I'm a part of it with small risk. And you could go into like the analyze or the market. Wait, what is it? So it's what tab is it that shows that? Is it analyze? Yeah. And you could go into the various stocks, right, that are in it. Like, so here's the top 10 holdings. INCY. So first and foremost, let's pull up INCY. Look at this. This was on the tight list, over here, right? This was earnings, and earnings didn't digest, but still, you had, look at this, higher lows, super tight price action. This is the only way that I know how to trade effectively is by finding very, very tight areas of price action where I get stopped out right away if I'm wrong. But if it goes in my favor, like it makes up for every trade possible. Now, I don't really execute into earnings, so that is what it is, but it's still a really good structure. All right. But yeah, if you go back into the tight list, you'll see this name, INCY, was right then and there. It was right there. Massive. So now you would just wait for consolidations again and potentially play more of a tighter, smaller flag. But you have a big breakout there. ROIV is one that I've tried to trade many times too. And, this one broke out of 12, but now it's kind of consolidate. Like it got tight here and now it's consolidating again. Earnings though, once again, it's around the corner. But if I go to the weekly time frame, I mean, look at series of higher lows. And it's still like butting its head here on 12. It's tried to go for it. It tried to go for it, the breakout here. Try to go for the breakout here. And then it keeps on kind of defaulting back in to its happy place. But while it's doing that, it is getting just very tight in this ascending triangle formation. So these names, and once they break, if they break out and right? So if I'm looking at it from a weekly perspective and I'm just like, okay, I'll enter right here and I'll have a stop down here. Even if I'm stopped out, it is, okay, whatever. But if it actually starts moving like it does for INCY, I mean, you're talking 2, 3, 4R multiples, to 1, maybe more, maybe, and then you got to trade it how the trade goes. But so that's what I look for. All right, that's what I look for. You say Disney looks like this? Let's pull up Disney. Yeah, so Disney's coming into its little measured move over here that I measured out. That was a while ago. Let me remove this. So yeah, I mean, look at Disney. See how tight it got right here? This is beautiful, right? You see these higher lows, and then it got really tight here. Then you see the pop out through it. Now, earnings is around the corner once again, so you got to be aware of that. Now, the larger time frame, you are still below a 200-day, so the more you trade under this, it's going to start to flatten out more and come back down. So be aware of that. But you do have the medium term turning around, the 20-day. I mean, this was that was clean. This is something that I would have traded if it was more on my radar. Now going into earnings, it changes things up a little bit. So what I'd look for now is if earnings comes out and the market likes it, kaboom, right? So we see a nice big move. Then what do? I do exactly what I said. I wait for price to consolidate it, and I look to try to play a follow-up continuation. Because I don't care about going here into earnings because I don't want to be wrong on a binary event. And I wouldn't care if I enter here and it goes up to here. Right? If I trade here to go up to here, that's one thing. Or trade here to go to here. But if I trade here and it pulls in, I would just structure it out when if it makes sense from a volatility perspective. Oh, cool. You closed out XBI on the monthly expected move. Nice. Get some profits, take it all off, or waiting to see how it sets back up again. Yeah, you got to do what's best for you, right? What's the best thing to do is what works for you, not like what somebody says. Like, so when I say I get out of a position or if I, put a hedge on, it's best for my portfolio, which, no one knows the exact everything that's going on at every single moment, the entries, right? No one knows every single thing about everything. So, and it's like the same thing when it goes to percentage gains. Like, some people scoff at somebody making 2% in a portfolio, but they're making 2% on like $10 million, right? While they're like, well, I made 40% in a year, while they're making 40% on a $1,000 portfolio, right? There's a huge difference here. So whatever you do, just know that if you're making 40%, 30% in your portfolio, right, which is a lot on any time frame, just know that you got to be able to translate that risk over time. So once you do have a bigger portfolio, you want to be able to make sure that if you're up 40%, like so for example, I'm up like 50% this year. I've been doing I have not been pressing limits on my portfolio at all. It's just the market's been going in my favor. That's it. That's the only reason. And if you compare me to the other people in the United States Investing Championship, there's some that are like at 400 or 500%. First off, I'm never going to be in that range because the only way that I'm going to be in that range is legitimately if we have another 2021, because I'm not using margin or leverage, and I'm also trading a much larger account than the minimum balance, which I don't know if they're trading $20,000 accounts. That's the minimum, or 25 or 20,000 is the minimum, but maybe they're trading like 30, right? So they can do the pattern day trading stuff. But I just brought one of my Fidelity accounts into their full value, and I just said I'm just going to trade this, and I get them both verified, both accounts, because I have two accounts in Fidelity. I have my Interactive Brokers account, which I do press limits on a little bit more frequently on occasion because it's a shorter term. I'll take a day trade and then I'll turn it into a swing trade sort of thing. But yeah. You're right. Nothing wrong with 25 basis points in a day. Absolutely not. I mean, think about it. What's 25 basis points for 22 days? Somebody do the math for me. I'm not going to be quick. So what's that? What's 0.25 like times what, 22? Is that the math? Like, think about that. If you average 25 basis points a day, that's a good year. That's like, if you do that for 10 years, like, whew. If you do that for 10 years, you don't need, if you do that for 10 years, all you need to worry about is adding more money to your portfolio, not by trading stocks, but by other sources of income, right? There you go. Thanks, Stinky Man. So 5.5% in the month. Yeah, if you're making 5% a month, and that's that's really good, right? That's really, really good, right? I focus on 2% a month, right? That's 24% a year. And if you actually look through history and you look at the best traders, their CAGR, CAGR, right? And you look at that over the course of 20 years, right? Some of the best ones are like 20% a year, 30% a year. For 20 years, though. FOMC is in an hour. The press conference is in an hour and a half. All right, you guys said PLTR. Let's pull up some names. Drop them in the chat. I'm going to take a look. I got to make sure that all my chats are here. Yeah, I had MTCH. That broke structure. I was out. And now I just got to watch it. So MTCH, this was one that I liked how it was setting up right here. This was one that looked like it can move into a stage two markup, 1, 2, how things were accumulating. And then earnings came out today. chances are you probably got stopped out beforehand. If not, then you'd be out now. And now it's back below the 20-day and 30-week. So now, if this sets back up, then I'd be back on radar. But yeah, this complete stopped out. It's down 18% on the trading session right now on, I'm assuming, earnings. And that sounds like a pretty extravagant move. So earnings was probably worse than expected. I think the earnings expected move in this one was like $3, $3.50 or something like that, if I remember correctly. Okay. Palantir, I remember seeing up on there. Yeah, so another incredible move on earnings, and it's been in a very, very strong uptrend. So now you look for consolidations, right? So earnings came out. Now, if it starts pulling back in and consolidating and volume starts drying up, that's what I watch. Sometimes it goes like this. Sometimes it goes like this. But I would still be looking for I'd be looking for the contractions. Sometimes it goes like this. But I'd be looking for the contraction. Right? It's strong as heck. So I'm not gonna sit and fade it, that's for sure. It's just on the radar now. Palantir's on the radar, right? It's been on the radar. That's why we have all these drawn out on the screen. Goes way back to like when it was like consolidating, getting tight over here, right? And getting back above, the rising 20-day, rising 50-day over here. And then you have like moves like this, shake out everybody, and it goes for its biggest run ever. What's that one that I think it's called App, right? App 11 or something? Like, look at this thing. Holy macaronis. Incredible. Yeah, Google we did talk about. So Google, right, we had the earnings move, consolidated, and I still have a little position in Google. This was like textbook, I'm entering into it, for sure. So I did. Right? It didn't set up right away when I wanted to see it, or it did set up, but it didn't go for it right away. But then it consolidated more, still held, and boom. I love these. Earnings gets out of the way, consolidates, comes back into a prior area. I'll take that trade every day. I'll take it every day because the risk makes sense. And I'll lose it. I'll lose multiple times. But the times that I win, like look at, I take the trade. Here was the risk. And it's up here. So, 1, 2, 3, 4. We're talking risk 1 unit to get 4. Boom, here you go. I'll take it every day. And a lot of the times I get stopped out, but that's okay. It's okay. I don't care, because if this happens to me, if I get 3 winners or 4 winners out of 10, and I just stay consistent with this on my position sizing, it makes up for that. Trade expectancy, right? It's not about individual trades. It's about looking over the course of 100 trades and be like, every trade that I take, it has an expectancy, which an expectancy basically means expectancy, what was I saying? I get so distracted. Expectancy is basically what you expect to make on every trade that you ever place. And you got to use like previous data, like 100 plus trades, minimum typically. You look back at your trades and say, hey, this is your risk, this is what your reward is, and you come out with your expectancy calculation, which I have, not on the top of my head, but you would need to know what your risk per unit is and so forth, and your position strategy. Maybe I got to put together a video. I have a video out there on that, but I think I can restructure it now. It's time. Maybe we'll do a live trading thing or something like that, where we'll just do live education stuff. Mobileye, MBLY, I think that was a trade that I took. Yeah, nice. So Mobileye too, right? It came on this monster move to the downside. It started getting tight up in this area, right? A little bit of a shakeout here when volatility expanded, but it tightened back up again. So yeah, another good move there on Mobileye. Now I wouldn't chase it, right? You can get a squeeze up to get this gap fill, but if you miss, like even right here was a decent consolidation, right? But after seeing a move from down here to here, I don't like entering here. I like this, where your risk is here and your reward is so, whatever, right? Or your risk was here and then your reward is here. So this is a great example of being shaken out and re-entering. Right? So price action got very tight here. You had this outside trading day. You can play the breakout here, have a stop here. Well, it went up and then it stopped down, right? So get you shaken out. But price action started curling back up and setting back up again. Now, it went into earnings, so you might wait for earnings to come, right? Oh man, I missed it. Oh, but it came back down. So then you might look at that and be like, okay, still, if I enter into these areas, I'll have a tight stop and then I can play into it. So even if you have a losing trade, it could reset back up. And it can take off. So yeah, that's Mobileye. Very strong move. But do I enter here? No, if I was in it, I would be updating my stop losses is all I would be doing. Locking in profits. It's, I don't know what the short interest on this, but yeah, once you get a squeeze, you can get a squeeze, right? Is what it is. I want to talk, MLCO was another one that I talked about a bit ago. This is Milko Resorts, and I think it's a China equity because people have been asking about China. But this one's been holding up rather well, and we've seen a little bit of a breakout today. Okay, the 200-day is still declining, but the 50-day is sloping up. We're getting back above that 20-day. So in my opinion, these are moves also that I like, where you see, earnings passed, right? We saw a nice strong move, volume dried up, and then we starting to get more volume in this area, and price is starting to break up. So that looked good. I got stopped out of BABA on this day, obviously. So I had a position in BABA, and then I got waxed out on open, and then it's back up. And this is what happens. A lot of Chinese equities, they do this kind of stuff. So when it comes to China equities, overall, I think the structure is still bullish, right? You get a strong move up, volume dries up, and you get some shakeouts. It is what it is. But that's why I always make sure that position sizing makes a lot of sense, right? So BABA, yeah, still holding up, still looking good, and it's still overall kind of just kind of consolidating, this recent run up, just getting a little sloppy up in here. I want to see Pinduoduo also did something very similar. Pinduoduo got very, very tight. We're starting to see it break up a little bit here. JD saw a little bit of a slippage. See how it slipped out of this tight contraction, right back in there. And I mean, this is interesting. We're coming into earnings, so be aware of that. But we've seen slip outs before like this before. Now, you see a lot of gaps in China, in the China markets, but look at Palantir, right? Look at Palantir. Palantir slipped out right here. And then it came back into this kind of contraction pattern. Boom. Right? So just because you have slip outs, shakeouts, you just want to see how it sets back up after the fact. And you can always re-enter. So imagine if you traded this and you're like, oh, I got out, it stopped me out. Woe is me. But it comes back and you just say, well, no, I don't want it to do that again. Okay, well, if it sets back up, it gives you an opportunity, or you can just walk away and look at the next opportunity because you don't know what it's going to look like after that. So you just got to play it. You got to play what risk looks like in there, right? Yeah, app is absolutely bonkers. APP. TLT. Yeah, we'll take a look at TLT. Byto. Actually, yeah, let's do Byto US first. Let's go Byto. Give me 1 second here. I want to look at my X feed. Oh, hey, what's up, man? On X, I'm being asked about BABA, KWeb, and PDD. So yeah, so BABA I got, PDD I got, and then KWeb I can pull up too. Bitcoin or Byto, right? Yeah, it's on. I'm still on a buy signal with my Bitcoin stuff. So actually, sorry, give me a moment. I want to make sure that I'm still in it. I have ETH, I have Bitcoin, but the position's been reduced, right? So I've reduced the position. We're going to take a look at markets here in a moment. So I know you're laughing at the Pinduoduo, but that's actually, I believe, if anybody can confirm that, that's actually how it's pronounced. Pinduoduo is the proper pronunciation. I think people say Pinduoduo or something like that, but that's actually not how it's pronounced. And if somebody speaks the language, that could confirm that. But I originally heard it from an analyst from China, and they said pin dua dua. So I try to do that. I try to make it. Obviously, you know, I don't sound good when I say it, but yeah, it's, people say pin duo duo, but it's actually the correct Chinese pronunciation from somebody from China. An analyst of that company says pin dua dua. So if somebody wants to correct me, that speaks language. No, I know, but yes, pin dua dua is actually the pronunciation, right? Not duo duo. That's the English pronunciation. But like I said, they're literally an analyst of that company from China. And they even talked about the pronunciation. That's why I'm saying it that way. I doubt that he would be wrong, but maybe I misheard it too also, so. Don't take my word. You got to go find the guy. He's a hedge analyst, Felix Young. He does global markets and primarily focus on Chinese equities. He said it literally live. Like I was at his live event. Yeah, we can pull up defense stocks. Just let me know which ones you want to look at. I am having a hard time pulling my portfolio up right now. Give me a second. I was trying to figure out if I had Bitcoin. I do. So I still have Ethereum and I have Bitcoin. I bought them a little lagged, but I did buy them when I went positive. And I've sold a little bit, but my Ethereum position's up 15.10%. And my Bito position, which I am currently in, is up 8.31%. And I just bought this based off of the signals that came up on my Sailor to Shift tool. I've scaled out a little bit and I look to buy in, if it continues and digests. Pin doo doo. Y'all are trolling me. Yeah. Pew pew. Pin pew pew. Pin doo doo. Oh my gosh. Lockheed Martin? Yeah, we'll pull up Lockheed. Oh wait, no. So somebody had mentioned, so Bito I did, and then somebody had mentioned TLT. So let's do TLT. And then I want to look at the markets really quick. So, so Stanley Druckenmiller had a recent interview, right? He did an interview, and like when this guy talks, you kind of got to listen because he's like, I mean, it's Stanley Druckenmiller, right? You don't. It's just wisdom. All it is wisdom, and he has the proof is in the pudding there with him, right? He's an authoritative figure in the markets, manages a lot of money, very successful. And when he talks, you want to listen. And he actually has been short bonds since the Fed meeting. So that position, pretty much as soon as they started cutting rates, it was in his favor. And he even mentioned that now down at these levels, he's like, now I'm kind of like, he was like, it's not like, he was like, oh, it was easy and now it's easy. And now at these levels, it's not like I'm going to be adding to my position and I'm a little hesitant to even be in it still. That's his words. So watch that if you want to watch it. But when I look at it, I'm the same thing, right? We're currently in a downtrend and we're getting quite a bit of like volatile moves here in this stuff. So right now we're below a declining 5-day moving average. I think we got to get through what the Fed is going to do and see how the market's going to respond and then kind of go from there. I think you're okay long-term with some bonds, but that's the thing. Like I've traded bonds multiple times. Like boom, I've traded bonds here. I think I've traded bonds on this day. I traded bonds into the close and then I closed out of it on the open because it was just like, whoa, like this volatile movement. It's crazy. So the reason why I traded here at the close and into the open was because I look at commodities, right? So if you look at crude oil that day, right, was down. Boom, it was down. And typically commodities such as oil can lead the bonds, lead the yields. And now we're seeing it kind of go up. So our yields, is this telling us that yields will continue to follow? That correlation's been kind of hit or miss recently, because obviously oil hasn't gone anywhere and or it's been going down, diverging from the 10-year yield. And this could be in part because the market's digesting the presidential election, the Federal Reserve, and so forth. And it might come back into a correlative state where we can, approach that a little bit sharper. But yeah, right now it's just bonds are a little too volatile for me. They're a little all over the place. Yeah. Oh, okay. Thanks, Bo. Yeah, I saw that. I haven't got to watch the part that you tagged. Was it what I just talked about? Because I did watch that. I did watch the video, but I don't know which part it was tagged on. He's still 25 NAV short bonds. Yeah, it still has a big short position from what it sounded like. The confidence wasn't like, I'm going to be shorting more here, sort of thing. What it sounded like. It sounded like he was like, now it's more like, maybe what I picked up was it's not going to be as easy of a trade as it was when he first initiated it, that it just kind of went right in his favor. I think like he mentioned a lot of stuff about bonds. He mentioned about like the 1970s too, I think. And also, I'm pretty positive if I remember correctly, he was talking about back then how he was so wrong. He was wrong for a while, but the fourth quarter he made so much money, and it was an environment kind of like this, where the dollar was going up, the 10-year yield was going up, and he was basically buying bonds at the time, and he was wrong. But then all of a sudden the position went way into his favor by like 40% or something like that, a huge position, and made him significantly positive on the year, if I remember correctly. Because when you have the dollar that just goes like this, and you have the bond market or the yields going up too, it's not like a great sign. And eventually something can break if it's not breaking already. And he didn't know what was going to happen. From my understanding, he's not going to. But he had an idea, a thesis, and he thought he was going to be wrong, and he kept on kind of loading into it, and it ended up playing out, in the final fourth quarter of the year for him. And like, I forget when that was exactly, but let's take a quick look at markets. Oh, okay. That's when you tagged me? Okay, so that's what I'm talking about. So, okay, we're on, yeah, thanks. I didn't catch the exact tag, but like I said, I did watch that video. Great video, or interview. Oh, okay. We're coming up to the Fed meeting, not too far away. Qs are coming back in a little bit. We are well extended, so to see it digest makes a lot of sense. Be potentially watching today's daily volume weighted average price and how it kind of manages back into this zone over here if it were to come. We did reach already the expectations for the month, and we're well outside of the weekly expectations, like by a long shot. Getting this far outside of it, I mean, the probability of coming back to this would be, in my opinion, is shrinking by the day, by the second. But there's always a high probability that we come back with weekly expected moves. I just wouldn't make that bet. Not that confident. Market net flow still has really bullish divergence, but we did lose convergence, meaning that the S&P 500 is just not following market net flow right now. And this is normal, right? You're coming into a big event, right? The Fed interest rate decision. We already know what's going to happen, but we don't know if he's going to be saying what he's going to be, the forward look is going to be like. And that's what could potentially rattle markets. So the market's digesting, calms down, volume typically dries up going into this event. So you're seeing that little bit of a pullback take place. Let's say potentially where we can go to. Well, let's look at the SPY. Earlier, we talked about 594. We still haven't even got back there, but look at the daily expected move. We did come into that, and we started kind of pulling back down slightly here, just digesting a little bit. So we'll go ahead and apply an anchor volume weighted average price. And we didn't even come back into that yet. So if we start breaking underneath that, just be aware that, if price can make a U-turn, that can make for a good trade to the upside. But like I said, the market has some digesting to do, right? If we take a look at what is this? Get that out of the screen. 593 potentially to the downside could be a magnet. That's a little bit of a distance there. And then 595 overhead can hold as a potential level of resistance, right? So we're below 595 here, and 595 in the more recent change can repel price. So if you're bullish, you'd want to be back above 595, right? You'd want to be back above 595 if bullish, because you'd want price to kind of get through that and repel forward. But as it stands right now, 595 is the kind of overhead little level right here that can potentially reject price. And we're right there right now. We're at 595. So let's see kind of what it does in and around 595. If we get pushed back down or if we can come back in and start making a move back. Market net flow is bullish. Starting to get a little bit of orders over here from a 0-day perspective. We'll update 0 date, see if anything's changed here. 59.75. And we're trading right there at around 59.75, just at that main 0-date level. So we're kind of just at the pin. I don't expect much right here. But after the bell, we got DraftKings, got ANET, we got Block, we got Rivian, Trade Desk, Unity, Affirm, some decent names reporting. And then Pinterest. I feel like I'm bullish Pinterest. Although I don't like it after this run up, but still. So then what we do really after earnings comes out, I want to see these will be back on the radar after earnings, so I can see how price action kind of reacts after the case and see if trades set up. Super Micro, what's going on with Super Mike? Getting a little bit of a bounce after getting absolutely destroyed. Yeah, I'm going to stream FOMC. I'm going to be here. Tell people to smash the like button. Thanks, Aaron Moore. I appreciate that. Yeah, if you guys can, help, smash the like button. Share the stream. It does help. That's for sure. Is tan ever coming back? I mean, I don't think it's gonna. I think that there's always that possibility for sure. Now, the thing here with tan, so tan is a solar ETF, and the thing here for me is that when you think about the solar industry, right, it's very capital intensive. And the capital, if you're debt, like there's a lot of debt, right? And this is, I mean, if you're here in California and you heard of SunPower, they just went bankrupt and they quoted because of rates. And, when you have so much debt and that debt becomes, expensive to manage because rates are going higher, it puts more pressure and it reduces margins, right? So this big move down here on the solar industry, and you look at the 10-year yield, which we'll just use as the gauge, it's been on this monster rip up. Yeah, it's going to put pressure. Now, a step further is I think that there was a lot of like green initiatives and policies that are in place by the Biden administration that really did help out solar. And I think that the market is kind of responding in a negative way because they think that things may change, that are changed. I don't really know the exact specifics of that. You'd have to kind of do due diligence to look. But what I look at is that 10-year yield. I just look at rates. And that tells me, I think that down in these areas, if the rates are going to start backing off, that might help its hand. But just understand that if you were trading something like TAN or any other, solar company, it is below averages, the 20-day, the 50-day, the 200-day, they all are declining. So it could be a while before it fixes. But if your long-term view is that it's going to be going up and resolving itself, then maybe you can enter. But right now, it's kind of just, getting tight, wedging around. I mean, look at what happened when we had infinite QE. This thing, it's so crazy. And then it just so very similar structure right here. Look at how it kind of got tight right here. And it was under the 40 week, 30 week right here. I mean, it's doing something pretty similar right here. Right? You get this move down, it tightens up, boom, you get an expansionary move. So if you do trade it, just watch out for breaks potentially, and then if it sets back up and gets back above the 40 week moving average, starts flattening out, it could set back up. But a lot of the times, it takes a long time for things to kind of adjust and to heal, to resolve itself, So it really just depends on how you approach it. Like if you're bullish solar, I mean, I wouldn't be like YOLOing a full-size position. At minimum, I would just be like, yeah, I'm just going to buy a little bit. And then maybe I'll add in a little bit more later and, a little bit more later for, whoever knows, like if you're thinking about 10 years, 20 years. I mean, is it really relevant if you're buying at 37 right now or at 25? If you're playing like a little bit here and a little bit there, like, and you're planning on holding it for 25 years, like, so you got to just take those things into consideration. But what I wouldn't do is, go full size. If I'm planning on holding it for a long period of time, I wouldn't do a full size right here. I would just be slow with it. Nike is getting a new CEO. Actually, it has a little bit of a positive divergence right here. Take a look. It had a higher low on the RSI. It is still below. It's declining 200-day. It's below a 50-day, 20-day. Some of the hype from the CEO kind of left. Earnings, it did not like its earnings move. It consolidated and it followed through to the downside. But right here, actually, I was hoping it would go down lower. But, it is kind of wedging with a little bit of a positive divergence right here. So these type of things that, like, if I were to trade something that's in a bearish trend like this, I would go over to the 15-minute time frame, 30-minute time frame, 65, whatever. Just look at the 5-day moving average. And I'd say if price can get back above it and this starts to flatten out and turn back up, I would execute and I would look at it from this perspective. And then I'd be updating my stops and being a little bit more aggressive as far as taking profits because I already know that I'm going up against a river that's flowing down into my face. I was hoping for like price action to be down here, and it might still, you never know. But even if you're a longer term person, and for Nike, if you think the new CEO is going to turn it around, I mean, you're talking 100, 120, back up to 130. So is buying a little bit here and a little bit there, a little bit here, like if you're holding it for 10, 20 years, like, does that really matter? If you buy a little bit and you buy a little bit for an investment kind of a way to approach it? No. In my opinion, it doesn't matter. You just, if you go full size here and then all of a sudden it comes down to 50 or 60 or something like that, and you get freaked out and you get out of the position and then it turns back around, that'd probably piss you off, right? So you got to just approach it in that manner. Especially when you're going against a trend. Because this trend, if it's this bearish, right? If it's a 200-day moving average, it's going to take a long time for this thing to flatten out and turn back up. Or a gigantic move. And at that point, I would just be looking for consolidations and then playing into that or adding to it. So, FXI. Yeah, FXI we talked about some China names. We had a little bit of a fake out, shakeout. Now we're getting some follow through. We had a strong move, consolidated on low volume, boom, and now we're getting some follow through. So all the China names look pretty bullish, in my opinion. You get an initial reaction after the election results, right? So we'll see if that matters for these China equities, right? They very well could, but China could come back and be like, more stimulus. So yeah, China names right now, from just an absolute perspective, with all the narratives out of the way, they still look good. PBD, you say clean energy? Yeah, it's the same thing. I mean, that looks really similar to TAN. The chart, at least. The internals, I don't really know, but the chart looks the same. Could be good, right? Especially over time, right? I couldn't tell you. It's just right now, it's obviously, right, you get an extended move, can snap back like woohoo, but still there could be a long time before this 200-day obviously turns back around. So intraday trading, like smaller trades or smaller swing trades, This one's a little bit more like less liquid, right? So if PBD versus like if I go to TAN on the 15-minute time frame, you have in like it's more liquid. You could just see that by the candlesticks. Oh wait, that's TNA. Sorry, my bad. I meant TAN. It's a little bit more liquid, and I was like, wait a second, why is it so high? What am I missing here? Let's take a look at MicroStrategy. Yeah, so all crypto-related equities, I mean, when we're on a buy signal for crypto-related equities, kind of says all signs of go for me. Looks very strong, right? Is it like, would I enter here? No, but like I said, I've already entered into some crypto stuff because, all right, I'm gonna show you when I started actually doing that because I posted it in Trade Ideas. October 16th. So October 16th at 10:53 a.m. said basically HUT, Mara, ETH, crypto names have been consolidating as a Sailor Swift tool, got to a buy trigger recently. So let's look at like HUT and Mara. So you go to HUT, and this happened on 10/16 right here. I mean, it's pretty good. Let's just say from the top to here. I mean, there's a 53% runner. And from an absolute basis, you had this higher low, consolidations, and it was getting back above these 20-day, rising 50-day, and the 200-day was kind of flat to there. So there's HUT. I think CORZ was one that I was talking about too. Yeah, look at this. Oh, that's earnings, but still over here and then over here again. Strong stocks get stronger. And then when we have some confirming signals, it really does help. What's HUT up to? Bam. HUT on 10/16 was right here. We talked about it at 10, whatever, 20, 23. Yeah, up 58%. It's pretty good. Oh yeah, I set up a Beyond trade too. What's up with Beyond nowadays? Yeah, Beyond I got stopped out. I did trade Beyond, but I got stopped out right here. Good thing. Good thing because earnings, well, I probably would have got out anyway because of earnings, but I got stopped out here. Sometimes I forget that I have a position on, and that's not fun, unless if it goes in my favor. But yeah, Beyond got absolutely clapped, so that one's gone. Things, right? It looked really good right here. Contracting, obviously in a poor trend, but got really tight. Saw an explosive move right out of the gate, and then it's just reversed on itself. So respect it. Respect it and get out when that's the case, especially if you have earnings around the corner. Okay, mRNA, can I look up PFE? Yeah, Pfizer, I was interested in Pfizer over here, and then it really didn't go anywhere, so I am no longer really interested in this name. It's, yeah, it has to sold off a little bit and probably see a bounce here in the near future, probably, but I'm just really not interested in these healthcare names because also you got to like, first off the trend, one, but two, we are moving into a new election. We got all the results in, and it feels like it's going to be a little bit against Big Pharma. So I'd be more hesitant in some names like this right now. And if Price wants to correct me, then have Price correct me and show that I'm wrong. by showing that price can turn back around and get back up. But I'm not really interested in trading this. mRNA, same situation, not interested. I mean, this is just a very clear downtrend. And, you know, if you try to buy the bottom, congratulations there. You got a little bit of a bounce, came back in, caught a little bit of a bounce, but then it just keeps going. So weak stocks typically get weaker. So this is a good example of a bearish earnings gap, right? You have a bearish earnings gap, you get follow through, then price consolidated, and then it follows through. I look for this stuff to happen, but I like to trade it from the long perspective. But, you know, these type of things are great for short sellers too, if you have the stomach to short sell. But yeah, I'm not a huge fan. Like, can you play trades and bounces? Like, if I look at this right now and this little kind of pullback is getting very tight, like, could I say, yeah, we're going to potentially see a bounce right back up into 52 and make like a little dollar per share with a small risk? Yeah, set up your trades however you want. But I'm talking from the perspective of more swing trading right now, for a little bit longer of a hold. And it's just not my cup of tea right yet. At this moment, just looking at the chart. But it doesn't mean that you can't drop into other time frames and create a trade plan and be successful doing that. You just need to be consistent and with your positioning, right? Read the gamma exposure graphs on Thinkorswim. Hey Dean, there's nothing on Thinkorswim that I look at as far as gamma goes. I don't use Thinkorswim for that. Are you talking about maybe Trady Ticks or Gamma Labs? Those are the ones that I use. Trading View. Trading View, I do put the levels on the screen, but we could take a look at market breadth, however you want to. There's so many different ways to look at market breadth. Hey, Coco, no. Give me a second. Tried to go for an ant trap. Affirm, yeah, Affirm is going to be reporting. We'll look at some of the names that are going to be reporting and go over them. I like Affirm. Affirm looks strong. I don't know if I necessarily, like agree with, what it is, like the whole buy now, pay later thing. But the market doesn't really give a crud about my opinion, and I don't really care about my opinion either. So we look at price, and what does price tell us? Affirm had an earnings move. It was bullish. It consolidated, definitely tradable. Boom, consolidated, definitely tradable. Boom, consolidated, definitely tradable. So we just got through this this recent move heading into earnings. So right now it's kind of butting its head up into this prior supply. And the expected move for tonight is about $8, right? So $8 from where we currently are can send this thing, up to 57 and break it out to a new high on the year, or, potentially back down into this area right here. That would be a 1 standard deviation move. I got to get some water for my. Oh, give me a second here. So as far as like market right now, like, yeah, it's bullish. So my thought would be it's going to be bullish, but here's the reality. Like, is that enough to understand what a binary move is going to be? Like, look what happened to Match, MTCH. We were seeing higher lows into an area of supply. It was looking strong here, and then boom, earnings came out. It didn't like it. The market didn't like it. So it's a binary thing. Now, if it would have opened up here, everyone would be like, oh my gosh, how did you know? Like, it's so crazy. That's amazing. Great setup. True, but the market didn't, right? And that's why I don't like holding a full-size position into earnings if I'm down on it or if I'm, break even. The only way I'm going to hold into earnings is if I'm already up in the position and I'm okay with the amount of risk that it's going to allow for. So that's what you need to ask yourself. Am I okay with losing $8 a share? Minimum. Think of it in terms of minimum. That's what the market's pricing in. It could go more. We've seen that. But at minimum, am I willing okay to lose? Like say if you traded it here and you're already up like this, am I okay with it coming back down and being break even? If you are, perfect. If you're not, you say, okay, do I want to get out of the entire position or just reduce some of the risk by lowering the amount of exposure I have so I can hold a bit in? So it comes down to preference. But right now, I mean, the chart looks good. The chart looks great. Go to the weekly time frame. Take a look here, right? You see these higher lows. Look at this is like markup phase material right here. The 40 week, the 30 week, the 10 week, they started turning right here in this range. Price action started getting back above it, consolidating here, getting tight. Boom. This could be the early stages of the markup. Bam, we see a big move, and then it consolidated for a very long period of time right here, getting back below these averages. Okay, so that was kind of more of like, watch out now. But if it starts coming back up, could set back up again. And you can see right here, right here, right here, and then right here today, this seems to be a very important level. And man, if this was like, this is a little bit too big to be a cup with handle because just the depth of this is like from $50 to $13. So it's not really a good gauge on a cup and handle. But if this is a bigger bottoming structure like this, you know, and you're breaking out here, I mean, you're talking, you know, what's double this base? We're talking up to like $100. Hey, it's funny. We laugh at it, but I mean, that's 100% gain. Who knows? Can I put an all-time high anchored volume weighted average price on a firm? Yeah, we can. SPY's coming in a little bit here. So remember that 595 that we talked about on SPY? Boop. The high of this candle, 595. Okay, coming back down to the daily volume weighted average price over here. 591 is growing in size. 595 is that repellent that kind of held us in place. So if you're intraday trading, these tools do help, right? And this is just consolidating coming into a Fed meeting, which is in announcement that's in 17 minutes, and then we have a little bit later. Let's go to the daily time frame really quick and look at a firm, because that is an interesting thing to do. I want to go to, yeah, let's just go daily EM. Okay. Coco, chill, chill. So a firm anchored volume weighted average price from the high, we're above it. We're above it. And we're kind of coming into this area right here. Okay. So that's good. We're above and we've been trading above it for a while now, pretty much. So you might be able to even anchor volume weighted average price from this like little swing low here. Take a look at this swing low. It's been holding. Bam, we started to move from it. We pulled back, saw a move from it, pulled back, saw a move from it too. So a firm is looking good across the board. It's looking good, right? We just got earnings. Got to deal with earnings. What was 591? I missed that. Zero date puts. So 591 is this level from zero date perspective that is growing in size. It's just in recent change. So I go over here to change, and it just shows us quick movements that are taking place as far as the zero date structure goes. And 591, it's red. When it's red, yes, this can act as a potential magnet where price can come into. Doesn't necessarily need to reach down there, but red would be the magnet. Green can repel. So it's important to know, is price above the green line or is it below it? It's below it. It went up to 595 and it got rejected. It's pretty normal stuff. And then if you go over to the total strikes, you have down here at about 590 is the total in size. It's the larger area of focus from a zero-day perspective. But above that, you got 594 and 595, right? So for the day perspective, I mean, we can magnetize right back up into those levels. So intraday price target is 591 as it stands right now. But I like to look at the changes because it gives me a good quick, like all of a sudden, if this like just went boom and this snapped up in size, I'd be like, oh yeah, watch out right now, right? Or if all of a sudden, you know, price is coming down, like we're at 594 right here, right? So if all of a sudden at like 594-ish, right? All of a sudden 594, we're above 594, and it just turns into a boom, big green line right over here, and we're above it. I'd be like, oh, this is where price can actually hold, and price can potentially repel further up, right? Oh, here is 594, by the way. This was actually a larger area of focus earlier. That's why we drew this line out. Because as price was moving higher, this was a big green bar, and we said if price comes down into here, this could be potentially where it bounces. But obviously, that was earlier in the trading session, so the structure looks a little bit different now. So I don't necessarily think it's as relevant because, well, things have already changed. But we left it up there. So we'll see. We'll see if it comes back. $565. So S&P 500, 559.65 is the call wall for the trading session. These were the 0-date levels in the early trading session. 59.95, 59.75, 59.65. And we have been really just kind of floating within this area, which are the larger levels. But we put this one out here because there was traders reaching out further. And I did do it because we do have some pretty positive market net flow. Okay. When market net flow turned gray, when the convergence turned gray, it just tells us that the price of SPY is no longer moving with this. And you can see price's action of the SPY just digested there a little bit. Look at copper. Can do. Yep. Copper's really exploding around here. So this is what happens with stuff like copper, right? Or any asset, right? Things move into periods of contraction and then expansion. And you can see we got very tight here. So I was bullish copper. I had a position in copper. I used SCCO. I got stopped out the other day. Why? Because it did this. Boom. It whipped me out. And then it came back. And this kind of stuff happens, right? When you are in negative gamma territory, or if you're kind of coming out of it, we came out of it. But when you are in negative gamma territory or around there, you do get a lot more fake outs and shakeouts and stuff, and then you get your move. So yeah, I'd be looking to re-enter if it's going to hold. But I was in SCCO. And I got basically stopped out fast on this day. And now it's back up here. So overall, I mean, this is still like decent looking. Like, let me activate this drawing. Let me draw this out. Boom. You can still see copper. Like, we'll use SCCO for the proxy here. But it is still actually, it's above a 50-day that's rising, above a 200-day that's rising. And it's really just kind of consolidating here. So is copper, especially if inflation is going to come back, are we going to potentially break this and start heading up higher? I think that is a potential still, right? But my risk management stuff got me out. So now I'm patient. I look for a re-entry. And if it works, cool. If I don't want to re-enter, I'll probably put my inventory somewhere else. I'll buy a different piece of inventory. But yeah, copper looks good. Copper does look good. We're just dealing with the presidential volatility, and obviously now in 10 minutes, we have the Fed announcement. Yep, pounds here to the drop and rip. Yeah, you got to be available. You got to be okay with that stuff. But sometimes these drops lead into like more drops. So, it's like, oh, why'd you get out, sort of thing. Like, oh, why'd you get out? It's back up. Oh, just to protect myself, right? And I can always re-enter. But I will say, if I get out and if it went like boom, 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 and it started following through down to the downside, like I feel way more comfortable getting back into a position than holding into something that might go against me further. So this kind of stuff happens all the time. You just got to be consistent. Like if you just decide, if you go through your stops or whatever and it breaks your whatever, and you just say, this time I'm not going to do that, well, you might get lucky. But if you don't have consistency around it, there'll be bad times. Just like there'll be good times, but the bad times will be bad. And I want to mitigate the bad as much as possible. All right, guys. S&P 500 just pulled down into its daily anchor volume weighted average price. It's holding up in this area right now. 10 minutes. Moonraker. That's actually a really good point. Hey, dude, thanks for that update. Say, what's wrong with buy now, pay later? That's infinitely better than pay now, buy later. It's funny. I don't think that there's anything wrong with it. I think it gets wrong when all of a sudden you see delinquencies skyrocket. And that's kind of what we're seeing. If you look at the housing credit report that the New York Fed posts, I think it's the New York Fed that posts it. You can look at that data. And yeah, 90-day delinquencies, they've been on the rise for credit cards, auto loans, and so forth too. UAL. Let's take a look. Yeah, airlines, man, they've been following their kind of their bullish seasonality. Nice big moves on stuff like UAL. Boeing, I don't think is doing anything. And it's just chopping around. I think we talked about it on, I don't remember when we talked. I think we talked about it this day, like on October 2nd, and it hasn't literally done anything. It's just been going around, kind of just chopping around. Still in bad context. But it might still be one of those things where it comes out on Q4. So who knows? But yeah, UAL is very strong. I just wouldn't chase it up into these areas. I just wait for the consolidations to take place. Paolo, hey Mike, how's it going? Remember me? Oh yeah, dude, what's up? Paolo is I was where were we? What hotel was that? I was in Vegas and getting dinner. What was the restaurant? That place was good, dude. Holy moly, that was really good. We had some like sushi and stuff, and then yeah, Paolo came up and introduced himself. It's pretty cool. Oh, it was called The Catch. It was called Catch at Aria. Yeah. Okay. That's what's up. Appreciate you coming up and talking, saying what's up. Yeah, it was so good. It was so good. Oh my gosh. Vegas, there are some food joints up there that are just like, poof. Gotta experience your food. See, we were considering going to Nobu, and I like told my wife, I'm like, dude, I can't go to Nobu, and like I just wasn't like, I'm like, it's just too like, it is great, but I just didn't feel like it was like I really had to like enjoy myself and like feel like relaxed to go experience something like the pricey or whatever, and like we had to leave the next day, and it's not like we were really drinking, and I was just like, it's just not the time. We went to Nobu in New York, and it was like, we were relaxed, we enjoyed it. It was great. And this place, Catch, was like still pretty darn pricey, but it was worth every penny. It was good service, great food, good atmosphere, still relaxing, and it wasn't like, like Nobu sort of style, but probably just as good. It was really good. What's up, Trader Joe? Just Moonraker. I can't even say so. What's that, Trader Joe? Saw a stat that 20% of credit holders still have not paid off last year's holiday purchases. Imagine how interest that, dang. That's actually pretty crazy. 20% of credit holders still have not paid off last year's holiday purchases. That's rough. Black Friday is around the corner. You got to get your good deals, get your good deals. I don't know what there's going to be or how good the deals are going to be. But Justin's asking about MTCH. We did cover that one. Definitely out of that position. I had a position myself, but I got stopped out on this move when it was undercutting these lows. And then earnings, I would not have held into earnings. So now I would just wait to see if it sets back up. This was looking really good for a potential stage 2 markup. But earnings comes out, right? It started getting tight. The 40 week started trying to get back up. The 30 weeks started to turn too. It was getting geared up and ready. And then when earnings comes out, I would have much preferred adding to a position after earnings on a bullish move. And now that we had a bearish move, you just kind of let it go. You let it go and see how it sets up. But I mean, cool. If it snaps back, awesome. But I would never hold a position for the hopes that it snaps back. It's just not what I do. I just cut it and I go, move on. And I'll cut it before earnings if it makes sense to do so, which I typically talk about. All right, we got 3 minutes here. Does Black Friday suck these days? Yeah, yeah, okay, so you're mentioning it. Oh, okay, here we go. I am a college Mandarin professor. You are right. Pinduoduo, not Pinduoduo. So I don't know if I'm still saying it right, but thank you. Here we go, ladies and gentlemen. Everyone was laughing at me. They're like, it's not that. I'm like, I swear to you, I thought I heard an analyst from China say it that way. I'm like, I'm going to just copy how he says it. It's funny. And I probably am still saying it a little bit wrong, but I'm trying here. Adobe, I was interested in Adobe. I definitely was. But, we went into earnings. I was just no longer interested. I was even bullish going into earnings, but I didn't trade it just because who knows what would have happened. And it went down. Now we're seeing it pick up a little bit, but it is a declining 50-day, declining 200-day, and it's getting back above the 20-day. So there's short-term momentum to the upside, but the overall trend is kind of, you'd be fighting the waters here. So I'd just be careful. Shorter-term trades, it's above a rising 5-day moving average. So just approach from a perspective of how you see fit. But me personally, it's not how I really like to set up a trade. Can people still see you? I see you. Oh, but I didn't see that last text or the last message. BDRBF. What is that? BDR. Why does this sound from BF? What is this? It's from the OTC Bombardier. It sounds familiar. I mean, the chart doesn't even look that bad. It looks a little choppy, a little illiquid. Oh my gosh. Yeah, look at the volume on a daily basis. Got to be careful with the illiquid stuff, but that can always change. I don't know too much about this one specifically, but I mean, the chart doesn't look horrible there. Okay, we got markets coming out here. We got stuff coming out. So let's pull up. I'm going to pull up Trading View. Go gamma levels, and I'm going to do a... We got NQ on the left side. Yep, here we go. Whew. All right, watching the market digest. See how the market wants to take it. Still floating around this 0-day level of 59.75. If the market likes what it has and it digests, watch that 59.95 above us. If it doesn't, 59.50, 59.65. It's going to be these levels here. Areas of interest. Oh, Coco's growling. So we had a 25 basis point cut, as expected. And we do have the, in 30 minutes, we do have the press conference, which can also bring in more volatility. Yeah, I'm not a proponent of carrying credit card interest either. It's just more expensive. I get that sometimes you can't pay it off, but that's the thing about credit cards is you gotta be in a position to always be able to pay it off, or you know, as quick as you can, or you just rack up fees and rack up just stupid interest. We got NQ over here just doodling. Really got through that really fine. Just we're looking at a 30-second chart, just watching quick ticks over here, just to see what is going on right now. Okay, I'm gonna. Oh, I thought I did an anchored volume weighted average price. I'm like it drawing on my screen. I'm like, what is going on here? All right. What's that noise? Again, so this is the anchor. That noise that I heard in the background while he's talking, it sounded like a video game. I feel like he's working and playing video games. Did anybody hear that? That was a very, that sound sounded very familiar. It was like, I can't make the sound, but. All right, anchor volume weighted average price from the Fed announcement. We are below it as it stands right now. Not much of a move so far. Below this, you know, be more cautious. But if we get back above it, that can produce itself a little bit of a pop. Like I said, we still have the Fed announcement. Yeah, not surprised. Very muted reaction. Yeah, it was priced in. Market's doing what it's doing. I would prefer to see the market pull in more, right? Because then it could offer up new opportunities. But honestly, it hasn't, which is data in of itself, right? The market already ran so far. Fast, very quickly, and it's just doodling right now. All right, while that's loading, I mean, it looks like it's getting ready to pop off right here. Like it's looking like it's probably trying to get through this. So, yeah, we'll see. Let's take a look at the bond market. Getting some movement here, not much also in ZB. Take a look at ZN, pulling in slightly over here for 10-year Treasury notes. Okay, we'll just take a look at TNX. 10-year yield bouncing a little bit here. Okay, and price action here, just even on this 30-second time frame, like just be ready because we can potentially see a little bit of a move here very quickly. Just very, very tight price action for a Fed announcement. I'm not trading it personally, but definitely know people would. I would just say I would prefer price to be above the anchored volume weighted average price if I was to trade that to the upside. All right, so market net flow, still incredibly bullish. don't have convergence, and we are getting a little bit of attention. So 593 is below us. That's good for a level of support. 596 is acting as a magnet right now, and then 597 could be level to watch as far as upside goes, which is way up here. So we'll see if that digests and changes up a little bit, because it's a little bit farther than what I want to see right now. Hey, what you doing? There's no way that I know of, Bo, of getting net flow on Thinkorswim at this time. I don't know of, but you know what? I didn't even think, like, I thought it was cool that they can figure out Bookmap to get into there. So who knows if they're integrating certain things and certain software that can be installed. From my perspective, I do not know right now. So, all right. I'm just checking 0-date levels, see if anything adjusted from this perspective. 59.65 is still kind of that main area. 59.95, they still got, I mean, it's still out there, but we're kind of just here. Like, this is where the concentration of the 0-date levels are. For S&P 500, this is S&P 500 right here on just a 30-minute time frame, just for gamma look. And then over here is NQ. I know a lot of people like looking at NQ. And what I do here is I just apply an anchor volume weighted average price to the announcement and kind of see how price dances around it. Right? I got price action very tight right here. Then when we broke above it, we saw a quick little pop. And we're still right now above it, which is a positive sign. And you want to just be more cautious below it. But right now, it's holding up well. Market net flow is holding up well. I mean, there's nothing bad going on right now. There just isn't. So, yeah. We'll see if the Fed brings any more volatility during their press conference. But right now, everything is like everything's holding up. Everything's holding up rather good. Scum ba dum bum bum, scum ba dum bum bum, doom ba ding 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 dong. Oh, well, I forgot about that. I totally forgot that I had not reduced my position in my other portfolio for Google. So give me a second here. Lucky me. It's above its daily volume weighted hour, or it's above its current implied move for the day. It's doing really good right now. NQ is still holding its anchor volume weighted average price here. I completely forgot about my Google position on my other account, and I forgot to reduce that. And I usually reduce. I did definitely in my competition portfolio. All right, so yeah, everything looks pretty decent right here. We'll see. These small structures are kind of pointless, but I do like to just watch where price is in relation to the anchored volume weighted average price. And price, like I said, gets tight. It gets back above it. You can see some pretty explosive moves. It's holding above it, starts turning back around. Cool. We have them also coming out here in 20 minutes and to talk and answer questions. As far as the 0-date levels go, once again, if you are bullish, I would like to see them reach out further here to that 59.95. Because right now you have 59.75 and 59.65 as the focus. And that's right here, where we're at, and right here. Okay? That would be nice. Yeah, having that market net flow there. Checking on Twitter. Here, Coco. Hey, calm down, little doggy. All right, we'll pull up Nvidia. Hey, what's up, Tyler? Thanks for subscribing to the channel. In Technical Tech, thanks for subbing to the channel there 2 hours ago. Same with One Wheeler. And Blake, Prinster, thanks for subbing to the channel. If you guys haven't done so already, make sure to subscribe to the YouTube, or you can follow on X if you're on live, or even on Twitch if you follow there. Appreciate all the support. Looking at Google right now. We'll take a look at Nvidia. Let's see what Nvidia's up to. Nvidia's cranking 586. It's big moves. Nvidia, just these, nice moves, consolidations. Boom, nice moves. We're getting some consolidations. Oops, wait. Did I have the right chart up? Yes. Nvidia, we talked about a little bit earlier how a measured move of this larger pattern right here would bring us up to around 170. That's just a measured move. It doesn't mean any necessarily is going to get there. But we did look at earnings applied move out a few days, and it was like $9. So it could definitely take us there still. Market's still holding up very, 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 very well right here so far, right? Market net flow, very, 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 very nice here. We're starting to get our convergence back, and our magnet here is about 596. That's another $1 or so higher. Holy macaronis, that's going to be up here now. It was 597, but don't rule that out, people. Don't rule it out. I wouldn't be looking to fade this by any chance. Like, I don't care about missing a move that falls. But if somebody's out there saying like a short, just be very careful, man. Don't average into the position. Don't build it up if it goes against you. Because sometimes this is where these type of days where you get monster flow and people try to fight it, it just keeps hammering them down. So if you're short, if I was to short this, I'll tell you exactly what I would do if I was to short this, right? If I'm looking at the price action for the day, we'll go to Qs, because Qs is outside of it's actually at the upper monthly expected move and outside of the daily bands right here. So if I was to short this, I'd probably be looking at like a 0 date or 1 date option, and I would just buy it at very specific risk, and I would just hold it till the end of the day. And if it corrects, I get it. But if it doesn't, I lose $100, $120, whatever the case may be, right? That's the only way I would trade it, because I would have a defined risk. I wouldn't be building into the position going against me, and I wouldn't be going net short anything. It would just be a trade, right? That'd be the only way I would approach it. And the thing is with those, when you're right like a lot. They go up 300-400% when they actually play out. And when you're wrong, you lose 100%, right? But you need to make sure that it plays out. And you're losing 100% of what, like $100, right? Versus, averaging in, you're building a gigantic short position, and it keeps on going against you, and then you puke it out. So that'd be the only way ever that I would approach that. And I don't trade options, so I'm not doing that. Simply put, I just chill. I just chill. FWOG, FWOG, is SMCI cheap? Yeah, we could pull those up. I don't know. What's cheap in a company that does fraud, right? Like, who knows how fraudulent they are. So yeah, you're going to see bounces, but they came out, horrible news, followed through to the downside. Earnings is out of the way. We're seeing a little bit of a reflexive bounce. You're going to see bounces and stuff like this. But as far as like cheap goes, who knows? Like, I don't know really the inner workings of what makes this cheap, but you can just trade it from an absolute perspective. And if it sets up, it sets up. I wouldn't be executing right now. I don't see the setup. It's just too volatile right now. on a daily time frame. So for a swing trade, meh. But on a day trade, even this, like, I don't know. The only time I would have traded this probably would be somewhere right around here, right? Where you see a strong move intraday, and then you get the volatility, but the volatility is obviously getting tighter, and then you play for a breakout. That'd be the only one that I would have played. Now, I mean, you look at it here, and you're like, oh, okay, well, it's also contracting right here. So here's another setup potentially, right? Where you can play. It's already up 12% on the day, right? So that's what I would look. These are the type of things that I would look for if I were to trade it. Okay. Yeah, I don't trade options anymore. I used to, but I trade equities. Options require a lot of work, man. It's already hard enough to trade equities, but now you include the element of time and different strategies. It makes it much more difficult. Options are a great tool to manage risk if you do it correctly, right? By the way, this is just a minute time frame that we were looking at here, how it was getting tight here on SMCI. Okay, let's take a look at, you said FWOG? F what? Where did it go? FWOGgy. I saw a FWOG outside. It jumped. FWOG. I don't know what this is, but it ain't loading. Fowler Oil and Gas Corp. I don't know what kind of product this is, so I wouldn't be able to give you too much info on that one. Is it like a specific contract of some sort? Yeah, I don't sell options either, but there's nothing wrong with selling options. Oh, it's a crypto? Yeah, okay. Yeah, selling options is great. If you actually have a strategy that manages that's you can do nothing against trading options, right? They are incredible tools to use if they're done correctly. Selling options, like selling premium, right? I think why implied moves are so important is because when you do get outside of these really wild moves, you can sell premium. I personally would say that like spreads would probably be the way to go. So your risk is more defined because you don't want to get like caught with your pants down sort of ordeal with some of these like crazy moves because you could get blitzed just like oof. So yeah, it just you gotta choose. Yeah, like well Blue said, like he's saying 10 deltas are nice. So yeah, choose your risk. Look at all that stuff and factor it into what would be best for you. Personally, what's best for me, like I went through all my trades and I just basically said, did trading options really benefit me too much? And I looked at it and I'm like, not really. And I was like, well, how much time and how many trades did I do? I was like, quite a bit. So I looked at it, I'm like, is it even worth it? Should I just put more focus on what I know is already working? So I said, yeah, let me just try this out. So one of the years, a few years back, I just said, or a couple of years or a year and a half ago, I was just like, I'm just gonna do less trading. And then it got to the point I was like, yeah, I just completely stopped. I did one option trade this year. One option trade. It was a 0-date trade, and I absolutely hit it out of the freaking park. But unfortunately, I used it on Robinhood, and they cut my trade 30 minutes before the bell rung. So when I went back in to close out my trade, it was already closed out. So I lost $100 when it would have turned into $6,000. That's how crazy the trade was. So I learned a lesson there. It's 10 minutes to Powell, 10 minutes to Powell. Dude, there was a time where you can sell these calls like for AMC in like 2021. They literally opened up the most craziest calls and people were buying them. It was like a no-brainer to trade it. Like a no-brainer. It was so stupid, but like I didn't do it. But I know some people that had, bigger bucks that wanted to, have the margin to take care of that. And it was literally, it was like, man, this is like the easy, like nothing's a guarantee, but that was pretty much like, we're not going to that level. They're not, whoever's buying this, oof. Oh, I didn't know that about Webull. I didn't know that they didn't have those on SPX options, that they didn't do that. It's been a while since I've traded Webull and even Robinhood. I don't really touch those products anymore. Nothing against them, but I just don't do it. We're below the daily volume weighted average, the Jerome weighted average price, the JWAP over here from the announcement. It's been chopping around. Once again, typical, we're moving into the press conference, so the market's doing its thing. Market net flow is still bullish. Still traders reaching out to 596. Qs, we're just doodling around the upper monthly expected move. Let's look at SPY. SPY's been rejecting at the daily expected move, and we're back near that daily volume weighted average price. TLT weekly expected move. Somebody is asking for. I can give you that. TLT weekly expected. That's where I think TLT might actually be beneficial, is if you look at those larger moves. So TLT weekly expected move was 88.03. So we didn't quite reach down there, right? 88.03 was down like where's, oh my gosh, 88.03, 88 right here. Okay, so we didn't quite reach down there on the weekly time frame. All right, this is 88.03, but if I look at the monthly expected move for TLT, the lower one was 87.92. Duplicate. Oh, I'm sorry. Sorry, not the monthly expected move. My bad. My bad. I meant the quarterly expected move. The quarterly expected move for TLT was 91.96. Is 91.96. So right here, basically right here. So we're outside of the quarterly expected move. So we hit it quick, right? The quarter started in October, and basically, if you're thinking in terms of like, where we could potentially go, well, we've already reached the quarterly expected move quickly. This goes back to like, when this S&P 500 in August, remember this move in August right here? In 3 days, we hit the quarterly expected move, or 5 days. These larger expected moves with the market prices. And so, I don't know. Perhaps that means something. We'll know in hindsight. But if you're buying TLT right now, you're buying it outside of the quarterly expected move. And the quarter still has this month and next month to go. So, let me add in here. Give me a second. I want to bring up the Fed live stream. Jay Powell. Yeah, that's very true. How easy it is to open up a Webull and trade, get into the options market, especially like when you don't really quite understand it. Like anybody could just kind of jump in and press buttons. Now, I don't think that they'll let you just like get into more advanced strategies, but maybe they will now. I really don't know, but that could be very dangerous if traders just can like do advanced like options trade, you know, like advanced trading with options and they don't even know like what's going on. Yikes. Like options still scare me. You know what I'm saying? Like there's so many things that can go awry. It's just not like, that's why I'm always like, when I talk about options, I'm like, yeah, spreads. or a directional bet, right? Like a leap, right? Or a put. All right. Okay. You know, I get those, but like when it comes to like selling and stuff like that, I'm like, look at spreads. I'm a scaredy cat. A firm is dumping. I actually like seeing this going into earnings. Not that I'm going to take a long position going into earnings, but I do actually like that because it like freaks people out. And then all of a sudden it rips. Like look at over here. Like see this day over here? Closed at the low and then that was the low. And then it started moving out. That wasn't earnings, but you get my point. So. All right, we got 3 minutes here. Buy it harder. Like net. NET, let's take a look at net. Oof, man, look at that bad boy run. Look at this consolidation, just boom, nice consolidation. Earnings is now like, again, you could have traded this going into earnings, right? If you just wanted to see it get a quick pop. And now, yeah, we have earnings. What's the expected move here is about $11. Holy man alive. These are some big moves. But yeah, look at this. This is what I love. Just big breakout, nice volume. Volume dries up, price comes in. And even on the when it came back down, like look how it pulled back in. All right, got 3 minutes left. SQ is dumping too. Yeah, SQ is I mean it's just an inside trading day going into earnings. So you get this breakout on SQ and now it's an inside day. But it is pulling in a little bit, but it is just inside trading session. Expected move on SQ is $8.89. Okay, look at coin. Yeah, so any crypto-related equity is doing really good ever since that kind of buy signal triggered on the seller to ship tool. But we are pulling into an area where we saw prior resistance. So what I would prefer to see is prices slow down and consolidate. And then just a monster base breakout, right? That's what I would like to see. But yeah, I mean, it looks good. It looks real good, right? Here, it kind of looks like this. Here, let me go like this. Activate this. There you go. Right. Remove this. So we're back above a rising 200-day. The 20 days trying to catch up. The 50 days turning around. So yeah, it comes up. Maybe consolidates in around here. Sets it up again for a bigger base breakout. But right now, yeah, it's pure strength. Extended, yes, but now you got to just be patient. So, you know, like I wouldn't have bought here. Like it didn't make sense to buy right here. Maybe it made sense over here, but even this day would have probably stopped me out. And now I wait, and now I see how it sets up. Like earnings completely faked it out. All right. Mara is doing crappy. Look at Mara and Hut. So once again, I mean, what did I pull up last time? I'm tripping here. Mara's coming into earnings. I am tripping here. October 6th. I think I meant Hut. Maybe that's the one that I'm thinking about. Yeah, but Mara's just kind of chopping around. On October 16th, that was kind of where the signal triggered for the buy and sell trigger. Price went up a little bit, calmed back down. Now it's up a little bit more here, but we have earnings. Which one was it that just took off? Was it Hut? October 16th, yeah. So Hut played good. What other one was it? I forget. All right, Jerome Powell's coming up. Here he comes.
afternoon. Just on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state and remains solid. Inflation has eased substantially from a peak of 7% to 2.1% as of September. We are committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. Today, the FOMC decided to take another step in reducing the degree of policy restraint by lowering our policy interest rate by a 1/4 percentage point. We continue to be confident that with an appropriate recalibration of our policy stance, strength in the economy and the labor market can be maintained, with inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.8% in the third quarter, about the same pace as in the second quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has strengthened. In contrast, activity in the housing sector has been weak. Overall, improving supply conditions have supported the strong performance of the U.S. economy over the past year. In the labor market, conditions remain solid. Payroll job gains have slowed from earlier in the year, averaging 104,000 per month over the past 3 months. This figure would have been somewhat higher were it not for the effects of labor strikes and hurricanes on employment in October. Regarding the hurricanes, let me extend our sympathies to all the families, businesses, and communities who have been harmed by these devastating storms. The unemployment rate is notably higher than it was a year ago, but it has edged down over the past 3 months and remains low at 4.1% in October. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market are now less tight than just before the pandemic in 2019. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly over the past 2 years. Total PCE prices rose 2.1% over the 12 months ending in September, excluding the volatile food and energy categories. Core PCE prices rose 2.7%. Overall, inflation has moved much closer to our 2% longer run goal, but core inflation remains somewhat elevated. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we're attentive to the risks to both sides of our mandate. At today's meeting, the committee decided to lower the target range for the federal funds rate by a 1/4 percentage point to 4.5% to 4.75%. This further recalibration of our policy stance will help maintain the strength of the economy and the labor market, and will continue to enable further progress on inflation as we move toward a more neutral stance over time. We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing policy restraint too slowly could unduly weaken economic activity and employment. In considering additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. We are not on any preset course. We will continue to make our decisions meeting by meeting. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains strong and inflation is not sustainably moving toward 2%, we can dial back policy restraint more slowly. if the labor market were to weaken unexpectedly, or inflation were to fall more quickly than anticipated. We can move more quickly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
All right, let's get these questions in.
Thank you. Given the expectation that the election outcome will produce policies that would meaningfully impact the U.S. economy next year, how is the committee taking these proposals into account for upcoming decisions, including potentially the next one in December?
So far, market
and
looks
can you give
pretty
us
good.
any more sense of how
Still,
proactive or
nothing's
reactive
changed there.
the Fed is prepared to be to changes in economic policies with the next administration?
So getting hung up with that daily expected
Sure.
move.
So let me say that in the near term, the election will have no effects on our policy decisions. As you know, many things affect the economy, and anyone who writes down forecasts in their job will tell you that the economy is quite difficult to forecast looking out past the very near term. Here, we don't know what the timing and substance of any policy changes will be. We therefore don't know what the effects on the economy would be, specifically whether and to what extent those policies would matter for the achievement of our goal variables, maximum employment and price stability. We don't guess, we don't speculate, and we don't assume. Now, just in principle, it's possible that any administration's policies or policies put in place by Congress could have economic effects that over time that would matter for our pursuit of our dual mandate goals. So we, along with countless other factors, forecasts of those economic effects would be included in our models of the economy and would be taken into account through that channel.
Nick.
Chair Powell, Nick Timrose from the Wall Street Journal. Roughly 1 year
talking about
ago, when the
for
10-year
Qs?
Treasury was flirting with 5% and 30-year mortgage
These are
rates were
new.
near 8%, you noted how higher borrowing costs, if they were sustained, could weigh on economic activity. Given that you've said you believe policy is restrictive and the Fed is now dialing back that restriction, are the growth risks presented by higher U.S. Treasury yields today any different from those you identified 1 year ago when inflation was still meaningfully above your target?
So I would just say this: we've watched the run up in bond rates, and it's nowhere
10-year
near
yield's
where it
coming
was,
up.
of course, a year ago. I guess the long bond rates are well below
Yeah.
that level.
Not much
So we're
movement there
watching
right now.
that. Things have been moving around, and we'll see where they settle. I think it's too early to really say where they settle. Ultimately, I'm sure we've all read these decompositions of what, and I certainly have, but it's not really our job to provide our specific decomposition. I will say,
Tesla's
though,
wild.
that it appears that the moves are not principally about higher inflation expectations. They're really about a sense of more likelihood of stronger growth and perhaps less in the way of downside risks. So that's what they're about. We do take financial conditions into account if they're persistent and if they're material. Then we'll certainly take them into account in our policy. But I would say we're not at that stage right now. It's just something that we're watching. And again, these things don't really have mainly to do with Fed policy, but to do with other factors in the economy.
Coming back
If I could
into and
follow
around
up,
the
is
volume
the
weighted average
September
price from
SEP,
the
are those rate
announcement originally?
projections still valid? Do they still seem
A bit of a volatility
relevant given where we are now?
You get halfway through the cycle between the last set and the next set. I wouldn't want to comment one way or the other. Let's talk about the data we've gotten since the last meeting. So in the main, the economic activity data have been stronger than expected. The NIPA revision was stronger. Certainly the September employment report was stronger. The October report, not stronger. Retail sales stronger. So overall, though, I think you take away a sense of
59.65,
some of the
still
downside
that
risks
main
to
area of
economic
focus on the zero
activity
date right over here.
having
So-
been diminished. with the NIPA
Keep a
revisions in
bottom lookout
particular.
for over there for 965.
And so
Levels.
overall, feeling good about economic activity. So I think we would factor that in. At the same time,
Market net flow is still
we got
bullish.
one
Inflation
report, which was,
Some support at
it
around
wasn't
594.
terrible, but it was a little higher than expected. So I think
Still
really
just
the
getting
question
rejected from that
is
daily
December.
expected
You know,
move, holding daily
by
volume
December
weighted
we'll
average
have
price.
we'll have more data. I guess one more employment report, two more inflation reports, and lots of other data, and we'll make a decision as we get to December.
Still just chopping. Wouldn't really read too much into this.
Gina Smilik from the New York Times. Thanks for taking our questions, Chair Powell. When it comes to December, what will you be looking at specifically as you try to make that decision? And then as of the Fed's economic projections in September, you had written down 4 quarter-point interest rate cuts in 2025. Do you still think that those are likely? Is that sort of the baseline outlook at this point, or has that shifted? And if it shifted at all, can you give a little bit of detail as to why?
I can't. We don't fill out an SEP, and I can't characterize one that wasn't filled out today. So I can't really speak for kind of exactly where the committee is. I will just say for December we're going to be, again, at every meeting we're going to be looking at the incoming data and how that affects the outlook. As you know, we're in the process of recalibrating from a fairly restrictive level at 5.33%. After today's move, we're down 75 basis points. And we're asking ourselves, is that where we need to be? That we're trying to steer between the risk of
All right, we're
moving
pulling
too
into
quickly
and around that 59.65
and
level.
perhaps undermining our progress on inflation, or moving too
SPY
slowly
is pulling into that
and allowing the labor
594
market to
level.
weaken too much. We're trying to be on a middle
594 right here?
path where
Okay,
we
so
can
not seeing
maintain the
anything
strength of the
change from
labor
that
market
level,
while
so-
also enabling further progress on inflation. We think that's where we are, but that's
See
the
what
question
happens.
we're going to be asking in September and in other meetings. And again, I can't really update you on the committee's thinking because we don't fill out an SEP at this meeting.
Yeah, totally appreciate that. I guess when it comes to your own thinking, do you think that a full percentage point of rate cuts in 2025 is a reasonable outlook?
Again, we're going to wait and see how things come in December. I mean, it's just, I would put it this way. We're on a path to a more neutral stance, and that's very much what we're on. That has not changed at all since September. We're just going to have to see where the data lead us. We have, a whole 6 weeks of data to look at to make that decision in December. Obviously, I'm not ruling it out or in, but I would say, I would say that, again, we didn't update the SEP, so I'm not going to characterize, where the committee would be.
Howard.
Thanks, Howard Schneider with Reuters. I wondered if you could please elaborate, explain a little bit the 2 changes in the language of the statement here. In the first paragraph, when you say inflation has made progress, dropping the word further progress. And in the second paragraph, dropping the sentence that the committee had gained greater confidence that inflation was progressing towards its 2% goal.
Who was ready for
Is there
that
any policy
59.65?
substance
Come
behind
on.
either of those changes in
Who
language?
was ready for
Is it
that?
meant to open the door to a December pause? Is it meant
So
to
if you're
communicate
trading, that's why
anything
these levels
about
are so important.
the stickiness of core inflation the last 3 months?
Come on, that was
Not
crazy.
really, no. So
Look at the
let me
look
tell
at
you
look at the move off of that.
what we were thinking. So the test of gaining further confidence was our test for the first rate cut, right? And so we met that test in September, and therefore we take that test out. If you leave it in, then it's new forward guidance. It's brand new forward guidance. What do you mean by it? Are you requiring yet further? We have to say yes or no at every meeting whether we've made further progress. The point is we have gained confidence that we're on a sustainable path down to 2%. So that I would tell you is what that's really all about. It's not meant to send a signal. Neither of those is meant to send a further signal. And saying further progress, it becomes a test. We don't want to be. We don't think it's a good time to be doing a lot of forward guidance. There's a fair amount of uncertainty in that. In what I've said, the path that we're on, we do know where the destination is, but we don't know the right pace, and we don't know exactly where the destination is. So the point is to find the right pace and the right destination as we go. And I think there's a fair amount of uncertainty about that, and you don't want to tie yourself up with with guidance, you want to be able to make sensible decisions as you go.
Yeah, I've looked at it at a tick chart before. I'll just look at the only reason why it's on 30 seconds right
Steve
now
Leisman,
is
CNBC.
just to
Mr.
watch
Chairman,
the
you talked
volume weighted
about
average prices. That's it.
higher
Tick
rates,
charts I
perhaps
look
from
on,
an
like I'll use
expectation of
Google
higher
Map to
growth.
look
You
at
didn't
like a
talk
tick
about
chart.
it in terms of expectations of
not
higher
trading off of the tick
deficits. Is
chart,
that
though.
something you think might be behind the recent rise in interest rates? And is that, are rising deficits a concern to you?
I'm just interested in anchor
So,
volume weighted average price
no
on
comment
NQ over
fiscal
here, and then I'm
policy.
just watching some
And
zero-day
again,
levels.
I don't have a lot more to say on what's driving bond
SPX,
yields.
which is over here.
In terms of
The big focus was that 59.65.
of policy changes, though?
59.65 is this big old
Yeah,
level right
let me
here.
give you a sense of how this
And its
this
price was
works
coming
in
down.
the ordinary case. Let's
was really
say
nothing saying
Congress
that it'd go
is
lower.
Considering a rewrite of the tax laws. Doesn't matter what's in the
So that's
the
why this
content.
was a
So
level of
we
interest.
would follow that. At a certain point,
Now,
we'd
come back
think we
down,
see the
but-
outlines, so we'd start to model it.
That's kind of how I look
And
at
then
these
we'd wait and
levels.
we'd wait, and at a certain point, the staff would brief the FOMC and say, you know, these are the likely effects. There's lots and lots of literature on the effects of tax policy changes on various parts of the economy. So we'd try to get smart on that, and then the law actually passes. And, you know, you'd start to put it, you'd probably run an alternative simulation before that happens, just to keep people trying to understand it. Then when it actually passes, it goes into the model, along with a million other things. So, you know, we have a very large economy. Many things are affecting it at any given time. And, you know, a law change of some kind would go in there, but it would, you know, it's a process that takes some time. Clearly, the legislative process takes a lot of time. And of course, the real question is not the effect of that law. It's all of the policy changes that are happening. What's the net effect? And, you know, the overall effect on the economy at any given time. So I think that's a process that takes a lot of time and that we go through all the time with every administration, constantly. And this will be no different. But, you know, right now there's nothing to model right now. It's such an early stage. We don't know what the policies are. And once we know what they are, we won't have a sense of.
All right, just so you guys know,
when they'll
we
be
anchored on
implemented or
a volume weighted
all
average
those sorts of
price
things. So
from
I think
the
I would just say
announcement.
We're not doing that now.
And price has really just kind of gone
all that
sideways,
will take
sideways
time,
chop, okay?
And it will be very much regular order.
Price came down
when we
into
do
a
that.
lower level here, which
If I could
happened to
just
be
follow up
on the
Nick's
S&P chart,
question. Are the
59.65.
current rates something
And we
you feel
bounced from
like
those
you
levels.
need
So
to
really, we're
lean
just kind of
against
in
that
between
they
some of
go
these key
against
zero-day
the
levels
direction
here.
of policy by adding restrictions
If
to
you're
the
bullish,
economy, or do you just take them as a given?
I mean,
and perhaps a signal
59.95
that
is
you should do
smaller in
less?
size comparatively now.
Look, I just think the first
Market
question is
net
how long
flow
will
has
they be
been
sustained?
bullish,
If you
kind of
remember
losing
the
to convergence
5%
right here.
10-year, people were drawing
It's just choppy
massively
right now, so
important
we'll see if anything
conclusions
opens
only to
up.
find, you know, 3
But
weeks
if
later
we start
that
getting
the
reached out, this was a
10-year
zero-day
50
level.
basis points
59.95
lower.
was a zero-day
So,
level.
you know, it's material changes in financial conditions that last, that are persistent, that really matter. And we don't know that about these. What we've seen so far, you know, we're watching it, we're reading, you know, we're doing the decompositions and reading others, but right now it's not a major factor in how we're thinking about things.
Chris.
Thank you, Chris Rugaber at Associated Press.
It's actually not a bad
you
idea,
mentioned the
Echo.
positive economic data that we've seen since the September meeting.
know how to do that.
Including the revisions to things like savings, higher GDP growth. We saw stock market jump yesterday. That's renewed some of the questions about why do many cuts at all in this with this backdrop.
So you're right. As I mentioned, and as you mentioned, the latest economic data have been strong, and that's, of course, a great thing and highly welcome. But, of course, our mandate is maximum employment and price stability, and we think that even with today's cut, policy is still restrictive. We understand it's not possible to say precisely how restrictive, but we feel that it is still restrictive. And if you look at our goal variables, the labor market has cooled a great deal from its overheated state of 2 years ago and is now essentially in balance. It is continuing to cool, albeit at a modest rate. And we don't need further cooling, we don't think, to achieve our inflation mandate. So that's the labor market. Inflation has moved down a great deal from its highs of 2 years ago, and we judged, as I mentioned, that it's on a sustainable path back to 2%. So the job's not done
Let's
on
just go to
inflation. But
6,000,
if you
man.
look
Let's
at
get
those
it
two
over with.
things, we judged in September that it was appropriate to begin to recalibrate our policy stance to reflect this progress, and today's decision is really another step in that process. Overall, as I mentioned, we believe that with an appropriate recalibration of our policy stance, we can maintain strength in the labor market even as our policy stance enables further progress toward our inflation goal.
Great. And just to follow up, could you what might cause you to pause rate cuts in December? What kind of economic data would lead you to that path? Thank you.
So we haven't, made any decision like that at all. But we're in the process, as I mentioned, of moving policy down, our stance down over time to more neutral level. And as a general matter, as we move ahead, we are prepared to adjust our assessments of the appropriate pace and destination as the outlook evolves. So, for example, if we were to see the labor market deteriorating, we'd be prepared to move more quickly. Alternatively, as we approach levels that are plausibly neutral or close to neutral, it may turn out to be appropriate to slow the pace at which we're dialing back restriction. Again, haven't made any decisions about that, but that's certainly a possibility. If you can think of it as similar to what we do with asset with asset runoff, with QT. So we reach a point where we slow the pace, much like an airplane reaching the airport slows down. And so we're thinking about it that way, but it's something that we're just beginning to think about.
Edward.
Thanks, Chair Powell. So with the noise in the jobs reports that we've seen, and you look at the Fed's favorite inflation, PCE inflation, overall it's 2.1%, very close to the Fed's target, but core inflation is 2.7%, and it's been that way since July.
Yeah, ES is just a different
so
product.
Why doesn't
SPX
this data give fuel to a rate pause
product I
for
watch
this
on that.
meeting?
For
Well,
the 6,000. You got to
so I think
understand
if
there's
you
like
look at
cost
the 3 and
carry, they
6
do
month,
rollovers on ES and stuff like that.
You're quoting the 12-month. So we look at all of them, right? But if you look at 3 and 6 month core PCE, you'll see they're around 2.3%. So we look at all of them, and we look at 12 as well. But what it's telling us is that we really have made significant progress, and we expect there to be bumps. For example, the last 3 months of last year, the core PCE readings were very, very low, probably unsustainably low. So that's why forecasts generally see a couple of upticks toward the end of the year. On the other hand, the January reading certainly looks like an example of residual seasonality, so that we saw last year. So when that falls out of the 12-month calculation in February, we should see a thing down. So it'll literally be a bump up and then down. We understand that. Overall, you see the progress on inflation, and you also look at the economy and you say, what is the inflation story now? Where's it coming from? So I point to a couple of things. One is the
market will not stop until we achieve
non-housing
6,000,
services
so we
and
can
goods, which
put it on
together
our
make up
hats.
80% of the core PCE index, are back to the levels they were at the last time we had sustained 2% inflation, which happens to be in the early 2000s for a period of 5, 6, 7 years. So they're back to that level. What's not is housing services. So let's talk about housing services. Housing services is higher. What's going on there is, market rents, newly signed leases are experiencing very low inflation. And what's happening is older, leases that are turning over are taking several years to catch up to where market leases are, market rent leases are. So that's just a catch-up problem. It's not really reflecting current inflationary pressures. It's reflecting past inflationary pressures. So that's one thing. The other thing is, I'd say look at the labor market, not a source of
Still
inflationary
got about
pressures.
$1,
Where's it coming from?
85
It's not
cents
a
of
very
risk
tight
price
economy.
in
What is
for
the
the day.
story about inflation? You see that catch-up inflation also in insurance and several other areas. So you're seeing
New high
we're not-
territory,
We're not
ladies and
declaring
gentlemen.
victory, obviously, but we
Yep.
feel like the story
Year to
is
date.
very consistent with inflation continuing to come down on a bumpy path
25%
over the next
in a
couple
year.
of years and settling around 2%. That story is intact, and it won't be
Actually pretty
one or
crazy.
two really good data months or bad data months aren't going to really change the pattern at this point now that we're this far into the process.
So you're quickly trying to get to that neutral rate that you see, or do you foresee that you have some time to get there?
Nothing in the economic data suggests that the committee has any need to be in a hurry to get there. We are seeing strong economic activity. We are seeing ongoing strength in the labor market. We're watching that carefully.
Crazy
But we do
dog.
see maintaining strength there. And so we think that the right way to find neutral, if you will, is carefully, patiently. Again, that's not meant to have a specific meaning, other than to the extent the economy remains strong, we have the ability to take advantage of that as we try to navigate that middle path between the two risks.
Craig.
Hi, Chair Powell. Craig Torres from Bloomberg. Two questions
Getting some big
today.
volume at
Did you learn
590?
anything about what Americans
here, see what's
think
going on.
about the
Market net flow
economy
still
from
bullish.
the election
We still got some
results?
focus out here at 596.
First
You're getting some
question.
supportive
Second
stuff
question.
beneath us.
I want to talk about some labor market indicators, and I do
it's
so
okay.
with
Yeah, that's
great
what it
respect
was
for
there.
your attentiveness to the
We're back up at the
maximum
daily
employment side of the mandate,
expected
Chair
move.
Powell. So the unemployment rate has been at 4%
been really
or
kinda
higher for
capping us for
6
today
months.
so far, so.
One of the broadest measures of
Market's acting
unemployment
pretty
is up
efficiently
about a
here.
half a point from a year ago. Compensation gains are sliding back. The quits rate, a signal of labor market dynamism,
there's that
has
reach
been
to
heading down to that
596.
bad neighborhood of the 20 teens.
A little bit higher.
So
It's about up
you
there.
have put a marker at Jackson Hole saying any further cooling is unwelcome. It is cooling generally a little bit further. So at what point do we reach what you would describe as a shortfall from maximum employment? Thank you.
Sure. So on your first question, I'm not going to talk about anything that relates directly or indirectly to the election. On the second one, this is the great question, and it's the one we think about all the time. So I'll just say a couple things. There's nothing really surprising here. What we know is that the unemployment rate is low. We also know that it's moved up significantly from a year or so ago. So we've seen a big change upward in unemployment. Sometimes that has meant bad things. So far, it doesn't appear to be. It appears that I wouldn't say that the labor market has fully stabilized, because I do think it's continuing to very gradually cool, but it seems to be in a good place, and our policy, of course, is designed to keep it in that good place, to maintain the strength in the labor market, while also enabling further progress on inflation. You mentioned a bunch of indicators, and you're right. The openings to unemployment rate is back to a normal level. I would characterize it more broadly as normalizing. You mentioned wages. Wages are still running just a bit above where they would need to be consistent with 2% inflation, unless productivity is going to remain at this high level. If we see productivity, more sustainably at these high levels, then that would sustain higher wage gains. So I would say, in fact, you can say it the other way, that wage increases are now consistent with 2% inflation, given current productivity readings. But of course, the lore on productivity readings is whenever you see high readings, you should assume they're going to revert pretty quickly to the longer-term trend. That has always been the case for 50 years. But it may be that we're now 5 years. If you look at the NIPA revisions that came out a month ago, we're 5 years into a nice set of productivity readings, which are sustained and very healthy. But overall, it's a good labor market. We could talk about 20 different data series. We'll be looking at all of them, of course. We don't want the labor market to soften much from here. We don't think we need that to happen to get inflation back to 2%.
Victoria.
Hi, Victoria Guido with Politico. Some of the president-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
No.
Can you follow up on?
Do a
do you
better
think
question.
that legally
Get out of here with that
you're not required to
bait
leave?
question.
No.
Mike?
Michael McKee from Bloomberg Radio and Television. You talk a lot
What a waste of an
about,
opportunity being there to ask
what
actually
the
a good
data
question
are telling
for
you
all of
and
us to
how
hear.
you are dependent on the data. But in terms of forward-looking assessments of the economy, what are you hearing from CEOs or other officials around the country? What did you hear today from the regional bank presidents about what companies and consumers think about where the economy is going from here rather than
it's like
looking
they
backwards?
know
And
that
does
what
that
they're gonna
match
answer,
up
right?
with what your forecasts have been and
So
what
why
you
even
think
bother asking
the appropriate policy path should be?
So it's hard to characterize a really interesting set of discussions we had, and of course you'll see them in the minutes in 3 weeks. But I would say this: I think the comments from our Reserve
Will you
Bank
leave?
colleagues
No.
and from the CEOs that they talk to are pretty constructive.
Like somebody
on the
put her
economy
in her
right now.
position
Pretty
to be in
constructive,
front of
feeling that
the Federal
labor
Reserve,
market is
pretty much the
back
most
to
powerful
normal,
person,
to the point
right?
where it's no longer
that controls our monetary supply,
that much
and
of
they
a
put her
discussion
out of
topic
everybody,
in their world, whereas 2 years
that was
ago,
the
it was all
question
they
that
were
they
talking
decided to
about.
go with.
So they feel like the labor market's in balance. People feel good about where the economy is. Demand is obviously pretty strong. And you're seeing, 2.8% growth in the third quarter
I
estimated.
would love to see the
Maybe
article that they're
year's
going to write
2.5.
based off of that
This
one-word
is-
answer.
This is a strong economy. It's actually remarkable how well the U.S. economy has been performing with, strong growth, a strong labor market, inflation coming down. We're, really performing better than any of our global peers. And I think that is reflected in what you hear from, what I hear people hear from CEOs. I don't get to talk to a lot of CEOs in my job, but I hear what others summarize
It
from
was,
those. And of
yeah,
course, I
that's
hear the
true,
Reserve
LJ.
Bank presidents do a lot of that, and it's pretty constructive overall. Now, that's not to say there
she
are
said it with,
areas
like,
of
a smirk on her
caution
face.
and things like that, but
So
ultimately, overall, pretty positive.
Well, to follow up, the areas of caution, if there were black clouds on the horizon
But
that
he
you
asks
identified
you?
as something you're watching, what would they
No.
be?
I think it's things
Are you
like
sure?
clearly geopolitical risks around the world are elevated, and just as clearly they've had relatively little effect on the U.S. economy. Now, that can change through the price of oil or otherwise, but people talk about those as something that's on the horizon all the time. But ultimately, if you look at the U.S. economy, its performance has been very good, and that's what we hear from business people, and expectation that will continue. If anything, people feel next year. I've heard this from several people that next year could even be stronger than this year.
Andrew.
Hi, it's Andrew Ackerman with the Washington Post. I just wanted to follow up on the discussion earlier on fiscal policy. Your predecessors, Greenspan and Volcker, spoke up loudly when they thought large budget deficits endangered economic or financial stability.
nervous.
Will you do that too? And
shaky voice.
right now we're
That's
in
what
a
happens
period
to
of
me.
full employment. We have large budget deficits and debt at historic highs that are rising. Is that something you'd speak out against?
So, I have said many times, no more, no less than what the predecessors you mentioned have said. And what that is that the U.S. federal government's fiscal policy is on an unsustainable path. The level of our debt relative to the economy is not unsustainable. The path is unsustainable. And we see that in, you've got a very large deficit you're at full employment, and that's expected to continue. So it's important
you
that
serious? That's what it says?
That to be dealt with,
CNBC?
it is ultimately a threat to the economy. Now, I can say that. I don't have oversight. We don't have oversight over fiscal policy. I've said it on many occasions, just said it again.
Out of everything that's being stated,
Okay, thank
that's
you.
what they run.
I guess the other
Breaking
question
news,
is
Powell won't resign
to
if
follow
asked.
up on Victoria's question.
There was already something
do you
earlier
believe
that Trump
the
said he would
president
not
has the
ask him
power
to
to
resign.
fire or demote you, and it has the Fed
There was-
determine
the
the
news already hit the
legality
tape earlier.
of a president demoting at will any of the other
We'll see if that
governors with
holds true or
leadership
not,
positions?
Not permitted under the law.
Thanks for the
Not
follow-up,
what?
game.
Not permitted under the law.
Follow
Thank
on
you.
Twitch.
Courtney.
Courtney Brown from Axios. In response to Howard's question, you said it wasn't an ideal time to give forward
Yeah, they probably wanted
guidance
the
because
clip.
of the economic uncertainties. Can
They
you
know
lay
what
out
they're doing.
what some of those uncertainties
know
are
what
and
drives
whether or not it
eyeballs.
includes some of the proposals that the president-elect has put out on the campaign trail? Tariffs, for instance?
Came out as breaking
No,
news.
I was not
Oh my
referring
gosh.
to the new administration's policies at all, nor will I today. So
Breaking.
what I'm just saying is, as we look ahead, we know, and I mentioned this in my statement, that the risks are two-sided.
I already know who's gonna be the
I
next
guess I
Fed
should start by
Powell, or the
saying
Jerome-
that
or
we think that the economy
Powell.
and we think our policy are both in a very
My
good
guess
place, a very good place.
Would be Neo
And,
Kashkari.
But as you look forward, you say, what are the risks? And one risk is that we would move too quickly
The
and
next.
find ourselves having moved too quickly and inflation comes back.
Or-
And we lost our
that'd be a
chance to get
Treasury,
inflation back to
Jamie
2%.
Dimon.
So we have to avoid that risk. And that to avoid
think
that
it'd be
risk,
Neil
that means you
Kashkar
want to
for-
move
for the
carefully. The
Federal
other
Reserve.
risk is that we move too slowly, and that we allow the labor market to weaken too much and do unnecessary damage to the labor market and to people's working lives. That says don't get behind the curve. So these two things are the two risks that we have to manage, and so we're in the middle there. We try to be in the middle and deal with manage both of those. Again, the idea is to support the strength we have
No,
in the
I'm
labor
kidding,
market
dude. Now I'm
and in the
getting
economy, but
notifications
also
about him
with
saying
a-
that he's
with
not going to quit. Like
somewhat less restrictive,
that's
but
what the
still
media was going
restrictive
for there.
policy.
I love it. It's great.
Enable further
Good news.
progress toward our 2% inflation goal. So there's,
Yelling for the Fed
this is
chair.
the thing where
Oh, no.
meeting by meeting, we're going to be making our assessment of what the right path is. It's not as important, the precise timing of these things is not as important as the overall arc of them. And the arc of them is to move from where we are now to a sense of a more neutral policy. We don't know exactly where that is. We only know it by its works. We're pretty sure it's below where we are now, but as we move further, there will be more uncertainty about where that is, and we're going to move carefully as this goes on, so that we can increase the chances
I wonder if she
that we
could
will get it right.
do Fed chair again.
Simon.
Right? When was it?
Thank you, Chair Powell. Simon Urbanovich with The Economist.
Scrooge
I know you
McDuck.
don't want to share your decomposition of
Scrooge
bond
McDuck.
yields, but if you look at the
She's-
break-evens,
Well,
it is
she
clear
was,
that
like, appointed,
longer-term
right?
inflation expectations do seem to have risen
not good at dates.
up at about 2.5%, for example, on the 5-year. That's up half a point
Yo.
from when you cut in September.
It was like after
do you have any
Bernanke?
concern at all that
Right, like
longer-term inflation
2013,
expectations are
14-ish?
de-anchoring, or put another way, are anchoring at a slightly higher level? Thanks.
So we would be
Kramer.
concerned
You
if we
guys, Jim
saw,
Kramer is going to be our
if we
next
thought
Federal
we
Reserve
saw
chairman.
longer-term
Deal with it.
inflation
It's gonna
expectations
be
anchoring at a
great.
higher level. That's not what we're seeing. We're still seeing between surveys and market readings broadly consistent with, I looked at the 5-year earlier today, and it's probably moved, but it's just not, it's kind of right where it's been, and also it's pretty close to consistent with 2% PCE inflation. So that's been a traditional one that we look at a lot. But overall, expectations seem to be, and really have throughout this, in a place that's consistent with 2% inflation. But you're right to say we watch that very carefully, and we will not allow
market's still really
inflation
strong, man.
expectations to
So
drift
far.
upward. But that's
Intel, look at
really why
Intel.
we reacted so sharply back in 2022 was to avoid that.
Got tight. Nice big breakout in Intel. Somebody had mentioned semiconductors. Semiconductors looks good.
Hi, Chair
Getting some really
Powell.
good
Kelly
follow through
O'Grady,
here too.
CBS News. We just talked
Boom,
about
boom,
what you've heard
boom.
from business leaders on the economy, but many average Americans are still not feeling the strength of the economy in their wallets. So what's your message to them on when they might expect relief?
So you're right that we say the economy is performing well, and it is, but we also know that people are still feeling the effects of high prices, for example. And we
The
went
effects,
through,
man,
the
they are
world
still
went through
high.
a global inflation shock, and inflation went up everywhere,
changing.
and it stays
changes.
with you because the price level doesn't come back down. So
there
what
it is.
that
Okay.
takes is it takes some years of real wage gains for people to feel better. And that's what we're trying to create, and I think we're well on the road to creating that. Inflation has come way down. The economy is still strong here. Wages are moving up, but at a sustainable level. So it's just, I think what needs to happen is happening, and for the most part has happened.
When my son's
But
old
it'll
enough
be
to get a
some time
job,
before
minimum wage
people,
is going to be like $70 an hour.
regain their confidence and feel that, and
And he'll be able to
don't tell
buy
people
2
how
gallons of
how to
gas.
feel about the economy. We completely respect what they're feeling. Those feelings are true. They're accurate.
I
We
shouldn't
don't
laugh
question
about
them.
that, because
We
if it's
respect
true,
them.
that would suck.
And just a quick follow-up, President-elect Trump has been critical of your performance. Any concern about his influence on the Fed's independence?
I'm not going to get into any of the political things here today, but thank you.
Nancy. Hi, Chair Powell. Nancy Marshall-Genser
He
with
answered
Marketplace.
nicer to her. Instead of just going no, he was just like,
What is your plan if we start to see
Thank you.
stagflation?
not today. Thank you.
So that's the whole plan is not to have stagflation, so we don't have to deal with it. So that is actually our plan. It's of course a very difficult thing because anything you do with interest rates will hurt one side or the other, either the inflation mandate or the the employment mandate. I would just say that, we've
All right, guys,
we've been
market's
able
holding up pretty
to
well
see
here.
inflation come down a whole lot.
Getting a little bit of a
much
coil
closer to
up.
our, our
Whoa,
goal
what just happened?
Without the kind of sharp increase in unemployment that has often accompanied programs
Hello?
of disinflation. So, knock on wood, we've gotten this far
Did I just cut my live
without
stream
seeing
off?
a real weakening in the labor market. And we believe we can complete the inflation task while also keeping the labor market strong. And that, of course, is exactly what we're trying to do.
Can you rule out an interest rate hike next year?
No, I wouldn't rule anything out or in that far away, but that's certainly not our plan. I mean, our baseline expectation is that we'll continue to move gradually down towards neutral, that the economy will continue to grow at a healthy clip, and that the labor market will remain strong. If you look at our that will not change from the September SEP. That is our baseline forecast, and short of some exogenous event, that will continue to be our forecast for the foreseeable future. So, but ultimately, we're not in a world where we can afford to rule things out a full year in advance. There's just too much uncertainty in what we do.
Let's go to Jean for the last question.
Here, gee, my software went away somewhere. I couldn't see it. It was like hidden.
Hi, Chair Powell. Jean Young with M&I Market News.
Okay, cool. You guys can still see me.
I wanted to
Good.
go back to a
Good
comment
stuff.
that you had
That was
made
weird.
about Americans
Oh, like
being
my
quite
stuff went away.
unhappy about the cumulative price level rises over the past few years, even though now inflation is back on a path to 2%. Would it be appropriate for the Fed to undershoot for a while on its inflation goal
You feel dumb going
under
long
the
right here?
average
Is it for a
inflation
day
targeting
trade, a swing
regime,
trade?
so people have a chance to catch up?
What kind of trade are we talking here?
No, that's not the way our framework works. We're aiming for inflation at 2%. We did not think it would be appropriate to deliberately undershoot. And part of the problem there is that low inflation.
I think we can
can
get
be a
this
problem, too.
$59.95. Come on, baby.
In a way,
6,000.
but that's not part of
Print
our
it.
framework, and it's not something we're going to be.
That'd be such a
looking at
big
in our
move.
framework review. Thank you very much.
All right, he's closing it out. There we go. Here comes the volatility. Let's now let the market digest. So overall, I mean, the market didn't really do too much. We saw a little bit of a spike in volatility kind of here where we came down to that 59.65. That was the main zero date level. So let's really quickly take a look at market, the zero date level, see if anything changed. And no, not really. So 59.75 is going to be that main level. So if we come over here, that's 59.75 down here. We are well above it with positive market net flow, still holding strong. And we do have a big area of focus up here at about 596, and that's about 20 cents off. We've already actually kind of tagged it. So that's a pretty strong move for the markets. As far as higher goes, I mean, yeah, if market net flow wants to continue trading with flow, but I would like to see, bigger red bars above that. And I would also like to see them reaching for, 58, well, this is 85, but 58.95, more higher. And they're just not doing that right now. I wouldn't fade it. So if you're thinking like, hey, I'm going to short here, just be careful. Like you can catch potential little moves here and there, but clearly the market's already made a big run and it's still holding up. We're above the JWAP, the volume weighted average price from the Fed announcement. Okay. Let me go ahead and remove NQ from here. Actually, I'll keep NQ up just for now. Did anybody when it was up here, when price was up here, did anybody, when we talked about 59.65 as a potential level, did anybody focus in on that 59.65 and execute when it bounced and showed strength or anything like that? Not planning for stagflation. New breaking news. Ain't that the truth? That's what it kind of felt like. It was, I don't know, man. It's like some of these people, some of these journalists, they ask like questions just to get their clip, it is weird. Like, I feel like they should be focused more. Like that one lady asked, about the people, right, in the economy. And Jerome Powell actually answered it legitimately. He says, well, yeah, things are getting better, but we are well aware that prices, they're not going to come down. So wages have to come up. And you could argue back and forth about all this stuff, but that is a legitimate answer that, once prices moved how they moved, Like, I just don't see, I don't see Chipotle, you know, all of a sudden peeling back like the cost of what they're selling it for. They're like, hey, we're selling bowls for now $14 when they were $10. That's a huge increase. He's like, why would we bring it down when people are still buying it? You know? The market is literally singing the song from Space Jam, I Believe I Can Fly. That's what it's doing right now, okay? Facts. These 0-day levels, man, they're important to know because right here, if somebody said, like, I'm going to short or they're short, they should have looked at this level and the various factors that we talked about and said, yeah, I'm covering or something like that, you know? Or you'd be prepared and saying, I'm going to look for strength after this and try to buy into it. Come on, 5995. Can we get 5995? Market net flow is still incredibly bullish. There is some trading reaching up to 597. The SPY is about 50 cents away from 597, which is the upper VIX daily implied move. This market is very, very strong. These monitors on my screen, they are known as JPGs, or sorry, PNGs. Get it? It's a joke. PNGs. PNG file. It's just a picture. I use it because I'm fun like that, you know? Is it too late to go into the rocket ship, or should I just hop in the rocket ship even though we've already made our move? I was hoping we get up 59.95, and then maybe I'll share a position that I took while I was on my live stream. I don't like to make calls. I don't do that. Because then people copy. And I don't like people copying. Copy trading is not what you want. Speaking of rockets, how about Rocket? That's a good point, huh? That's what is that? Is that flying off? RKT had some great setups like back in the day. Like it was over here. Like look, I got to show you these because these were incredible setups. RKT. So if you've been in the I don't know. Maybe I said it. I forget where I said it exactly. I thought I did it on yeah, like over here, these little flags and this flag right here, those things were just beasts. So these are some that we called out a while ago. Huge moves. Now what is it doing? Yeah, it came down into a rising 200 day, and it's actually, I mean, it is kind of wedging here. I don't know how you want to draw it, whatever, but getting back above a 5-day moving average. Cool. Ooh. All right, y'all. I did take a little trade myself while we were coming down to those levels. And I reduced just now. Nothing big, nothing crazy. Nothing crazy. Let's take a look here at XBI. Ooh, man, oh man. XBI, yeah. I think that XBI did pop. I think it could pop above. I'd still prefer to see it consolidate a little bit versus buying at the highs, but I can see why somebody would want to execute into the strength and then just have some sort of position on the tape. But right now it's holding up really well. Come on, let's just go to 6,000 a day. How about that? How about that? Cap me outside. How about that? But how about that? All right, 59.95. They weren't reaching for it. Let's see if anything changed. Still not. Like, really, it's not. So when it hits 59.95, if it comes up there, careful. This kind of area up here. Okay. You want to see things change from this perspective, but it's not. So it's kind of like we're getting this little squeeze. But can we squeeze high enough would be the question. And I would really prefer this to just, boom, skyrocket. Got 40 minutes till the market closes. Gunlock from Double Line Capital, Jeff Gunlock, says not positive on long-term treasury bonds. He is the bond king, people. But then again, also, Druckenmiller is short bonds too. But his timing was impeccable. Okay. Thoughts on Doge? First time chatter, Nadi. What's up, man? On the Doge. Oh, I want to see Bitcoin, actually. Where is Bitcoin? How's it doing? How do I even pull up Doge? I can pull up the analysis on it if you want. Yeah, look at Bitcoin, man. Beauty. This is Bitcoin futures here. It's a nice move. So when it comes to the crypto stuff, I look at a buy and sell trigger, Nadi. So if you haven't seen that movie, it's called The Sailor to Shift Tool by me, Figuring Out Money. But I use that as kind of a gauge of when to get into crypto and when to get out. And it is on a buy signal, buy trigger. And I don't know how to pull up Doge on Thinkorswim. Maybe I'd have to pull it up on, like here, maybe? Doge. There we go. Yeah, so, some of this stuff works just so nice, but October 16th was when the trigger was triggered, right? So 15, 14, 15, 16. So this day. So if I looked at Doge, right here, this October 16th, so this is when we got our trigger from the Sailor to Shift tool. Price went up, kind of consolidated, boom. And these are what I like to see is you see strong moves and then consolidations like this. Now, it could definitely go higher because strong, equities, strong stocks typically go higher. But I prefer to wait for the consolidations, right? So we see an explosive move, then you look for volume to dry up, right? Volume to come in, and you get these inside trading days, like to come in a little bit, and then you look for another move, very similar to how this played. That's what I look for. And that goes back to the whole RKT thing. Somebody had mentioned Rocket. And that goes back to over here, where we saw a nice big move up, a nice consolidation, nice move up, nice consolidation, right? Volume dried up, and we just had these explosive moves. The reason why I look for that is because the risk is very defined, and the reward could be, it could be huge. It doesn't always play out like this, but you know, if it just went up to here and you got out, I mean, that's, you risk this much and you get this and you get this and you get, you know, you get like 4 to 1, which is crazy. I can hear my son wailing, crying right now. It's nap time. Throws up his little fit. I don't wanna. TLT. TLT's popping up a little bit. I mean, it's, geez, look how volatile this is. It was closed here and then opened here the following day. And now we're blink back up here. I'm getting asked about the zone document. The zone document, how a lot of names got extended. I'll comment on that a little bit later. I'll do that actually in the Discord. But that's common, right? This is, I mean, the price can get outside the bands. People ask, should I short? That's up to you. Remember, things move between contraction and expansion. So price expanded and it's very strong right now. So chances, like, it will go back in the bands. But is the band going to actually snap up higher to catch up to price? Or is price going to come back into the band? And that's the thing where you kind of just got to be a little bit more patient. Like, for example, if I just pull up XLF, right? So this is what I was asked about XLF, and I go into, and if I add them, right? So yesterday's band was here, right? This was the high, and then we closed outside of it, and then they're dynamic, they're always changing. But as you can see here, we got outside and now we're coming back in to that band, right? So today's band right now is currently right there and we're back in it. So it's still gonna be red as far as on the zone document goes. I know there's gonna be people on here that don't know what I'm talking about. It is what it is. It's just something that I share on a daily basis. It gives a good fractal view of the market. It's an indicator built originally from Joe Catanzara, bridge bands. But what I do is I actually extract bulk data to look at where a bunch of different products are, to give a quick view of like intermarket kind of trades and where things might be extended. I want to look at ASML. ASML. Let me get these off my screen. Yeah, I mean, I'm just not a fan, right? Like, it's clearly in a pretty big downtrend. You do see things like a little positive divergence here where you have a lower low, a little higher low right there in the RSI. So yeah, these things can lead to pops, lead to little moves to the upside, right? We're getting back above a 5-day moving average. It's starting to flatten out here. We're at a point of control. So yeah, if we start clearing this 680, you know, and this starts to turn back around, maybe that opens the door for back up to 710 and see what goes on from there. But you just got to be aware that you'll be fighting the tape or fighting the trend. So you got to be a little bit more, you know, strategic when you approach these names. If you're a long-term holder or something like that, then you could think about it differently. But from my perspective, I'm talking from the terms of a swing trader. This would indicate that you're fighting the longer-term, medium-term trends. So you'd have to go into the shorter term if you want to be a little bit more tactical in that. And maybe look at some various levels via anchor volume weighted average price. Maybe the swing low, right? So if I go into down here, and this is the 5-day moving average, I can maybe apply an anchor volume weighted average price to the swing low and use this as an idea for risk. All right, so if I'm entering in here while this is turning, hopefully I get a larger change in trend, and then I'd be, you know, watching this anchored volume weighted average price and or having to stop under today's low. You know, but you just got to be aware you're fighting trends. Do I still use HYG as a leading indicator? Yeah, on occasion I'll pull it up. All right, but it hasn't been doing much lately. So, and I look at it from an absolute perspective too. And when I look at it from an absolute perspective, I mean, it doesn't look too bearish, right? It looks like it's just consolidating and flagging. Now the bearish scenario would be like in the shorter time frames that I look at, like the 60-minute. You look at the divergences. So HYG is going down while SPY, right, which is, they have a strong correlation, has been going up, pretty significantly. So that would be that divergence there, but I'm not going to execute quite on just on that. So I think I use it as more of a warning sign, and then I'll get into things like the 5-day moving average, if those things kind of confirm it, right? Look at trend changer here. And you could look at, the direction of the 5-day moving average. This thing's off my screen over here, the Qs, right? We got back above the quarter to date. We got back above the quarter to date over here. Same, 5-day moving averages are all turning up. Yeah, so things are extended. Let them come in, let them digest. But, the market is absorbing a big shock right now. So it's going to create FOMO. It's going to suck people in. And where can it suck people into? That's where I go, right back to the 6,000 marker, right? I think that people are going to get sucked into 6,000 and maybe get overly hyped up, and that's where things can take a pause. 6,000, 6,020, right? That's where the gamma exposure currently is at. And that's also where the JPM collar is. Yeah, Palantir, we looked at Palantir. Geez, this thing is insane. I wouldn't be buying here, but I would definitely be watching for consolidations. And if you're in it, congratulations. You can just move up stops, partial profits, whatever the case may be. But I wouldn't be buying after a move like this, right? Because I don't want to, I know that it can probably go higher, right? But what's the path to going higher? Right, so say if it goes up a little bit higher and then I buy it here at 58.60, what would be the path and where would I hold it to? I wouldn't want to hold it up here and then all of a sudden it does this. And then I just get tired of my capital being chalked up. I'd rather look for the consolidations and then trade that move. Not to say it's going to do that, but that's what markets do. They move between expansion and contraction. Expansion and contraction. Expansion, sideways action, Toast. What's up with Toast? Toast. Yeah, look at Toast is another one. This was probably on the tight list. Looked like a great little consolidation here. It broke out. Another nice consolidation. And then back into this base, and then we're seeing a nice move. Earnings, though. So is that why you're bringing Toast up? Is that today? Aftermarket, 11.7, yeah. So earnings, you're looking at about a $4 expected move. So wherever we close, you can pretty much count it that we're going to go up $4 or down $4, right? So up to 37-ish, or potentially, down back to the 50-day moving average, around 28, 29. Which even if it came down here, that would still look like a pretty good chart. It's just, wait to see how price responds in that area. QCOM, Qualcomm. Qualcomm looks like it's getting a little bit caught up here at around this area. Yeah. I will say though, on Qualcomm, you do have the 20-day, your price above it. The 50-day started to flatten out, and the 200-day is still inclining. So, and then you have earnings that it's out of the way. So that's nice. So for Qualcomm, I wouldn't mind. I don't mind setting a trade up here for Qualcomm, right? Because it's pretty clear. If I go into a smaller time frame, right, we're above a rising 5-day moving average. So if I entered in, just say right now, I probably have a stop down here or a stop down here at this low, and I'd be looking for a continuation of this 5-day moving average trend to potentially go retouch the 182 and even higher, breaking out of this longer base. Just know that the longer we trade under the 200-day moving average, it's going to flatten out here and then start to turn. So I'd want the 20-day to hold, and I'd want the 50-day to start turning up, and then start going 190, 200, and so forth. All right. So not a bad looking chart here, coming in a little bit today after a pretty large gap up. So what was today? Was that? Oh, this was earnings. So this is how it's responding on earnings, right? Or wait. So today, so it reported, and then now it's kind of playing through. Okay. Yeah. That's what it is. Yeah. So earnings, boom, and then it's a beautiful move on earnings, but then it kind of got faded intraday. And pre-market. I think that makes it pretty clear. I think it's decent. I just you just pick an idea for risk, but so far interesting how it reversed on itself completely, you know. I think that is data that shouldn't be just ignored. So I'd be zooming in on those smaller time frames and just being aware that the daily is looking pretty decent there too. Drop on Wolf. What happened to Wolf? Was that like an earnings move? Yikes! Yeah. That's why I don't like trading earnings, people. I just like to wait. So Wolf looked great as a nice little pop-up, right? But there you go, right? You're in declining 200-day territory. Earnings comes out. You just got to be careful with this stuff. I'm not much of a fan of holding into earnings. Sometimes you get lucky, sometimes you don't, and it's too much of a risk for me. So if you're going to trade earnings, make sure your position sizing makes sense too, and that you're using proper strategies that make sense for earnings, like butterflies, right? Earnings butterfly. That's a well-known strategy for doing this stuff. Like I said, I don't trade options. So if I was to trade an earnings, I would look at the risk, right? If it's going to move $10 per share, has that potential. It could move more, it could move less. But if the market's saying $10 and I only want to, like my trade, I don't want to lose, more than $100, right? Or I'm okay with risking $100 on my trade, let's say. And I already know it's going to move that $10 potentially, right? I'm only going to buy like 10 shares or short 10 shares. And either it exceeds that move or it goes into it. But I know that that's how I would kind of back into the risk there. Coin, yeah, so Coin, I talked about Coin earlier. I like Coin. It's seen a strong move. Earnings are out of the way. I'd be looking up in this area of supply here. We're still on a buy signal for some sailor to shift to over the Bitcoin. So if we come up into this area, I'd be looking for consolidations. I'm not going to just enter right here after this move, even though chances are it's going to come up higher. I'd prefer to see consolidations here or, move up higher and then consolidate and then be able to like execute, less risk. Because if I enter in right now, where's my stop going to be? Like below the low of this candle, below the low of this candle maybe. And if I enter right here and then the stop is here, I'd have to be at like a minimum, like a 1-for-1 here for risk. And, I would prefer it higher. So what I would like to see is, price come up, consolidate, this be my risk, and then play a bigger base breakout. And then it makes a little bit more sense for me. So it just depends on how you want to approach it. You always got to ask, where did price come from? Price came from down here, very quickly up here. So I prefer to see digestions. All right, NQ is coming back down to the anchored volume weighted average price from the low, from the report. On the report, that's the low anchored volume weighted average price since the Fed announcement, sorry. And then the anchored volume weighted average price right here is the JWAP itself. So I'm gonna go ahead and remove this one so you can see it more clearly. And there is the Jerome weighted average price from the announcement. So you can watch to see how price digests in and around that area. I think I'm going to be calling it a night for this live stream. Give me a moment here. That little trade I put on, I still have some on, so I'm probably just going to exit actually right here because I'm not going to be focusing on it. But, so give me a second. I know I'm doing it from my phone because I don't want my account up right there. So back to what we were talking about a little bit earlier. This, all right, let's see how it reacts around this anchor volume weighted average price from the Jerome. This is just NQ on the 30-second time frame. It's tiny time frame. But down here at 59.65, while price was kind of working itself down when we said watch out for this level, I did make a little execution on TQQQ. Not big. But then I exited out some a little bit ago when I said it, and then I just got out of my position there entirely. A couple $100. Not $40,000. A couple $100. All right? A couple $100. I'll take it. That's actually real money to me. It's always crazy to me, like how, like, it's like being at the casino, right? And you have poker chips or whatever, or like blackjack tips. You kind of forget the value of money because they're all the same size chip, right? Or the same, like, you know, they're just different colors. But it's like you're playing with like green chips, that's $25 or whatever. And like you forget, like, dude, $25 is like, it still gets you some, like that's still like a decent amount of money. And you're tossing it back and forth. So when I make $100 or $200, I'm like, I always think of it in terms of what I can spend it on. You know, so when like I make $200 on a trade like this, it's like, hey, there's a grocery trip, right? There's a trip to the grocery store. Now I might lose it tomorrow, but you get my point, right? Dave H. Contrarian was right. First off, he's been saying 6,000 for like years, and now it's not even 6,000. Now his thing is 7,000. So I say, let's get to that 6,000 and actually get there first, which, I mean, come on, dude, we're going there. We're so close. We're so close. Could you imagine if we don't tag 6,000 and we go into a bear market? I feel like that's less likely than just going to 6,000 and touching it, right? Like if I can make a bet, if I can bet $100 and say, we will hit 6,000 before the next bear market, I would take that bet, even though that the odds of it paying out would probably be like, I'd probably make like $5, but I'd have to risk $100. In other words, I feel like in a roulette table, if I covered, so you get paid 35 to 1 in roulette, right? 35 to 1 or something like that. So if I went in and I've covered $1 on every square except for like, there's 39 squares, right? Or something like that. So if I went in and covered 34 squares, I'd be risking $34. I don't know if my math is right. Sorry, I don't really know. I'm just guessing right here. I think I'm pretty close though. So if I risk $34 to make $1, I'd probably make that $1 pretty frequently. But it'd only take one loss to obviously give it back. But that's my thought process here. Is like I feel like we're going to 6,000. I don't know what the path is going to be there, but it feels like that's in play. How brave of me to make that prediction while we're 10 points away. I know. All right, I'm hopping off. I appreciate everyone showing up today. Everyone out here on YouTube, thank you for tuning in. Thanks for setting your, hitting the bell so you get notified when I go live. I know I'm not. It's sporadic when I come on and stuff. It's been all over the place recently because just trying to adapt to my one, new place that I moved into, but two, having a child and all this stuff. It's been very difficult to adapt. But we move on. That's what we do. Appreciate you showing up, Goose, Andy, John, Nolan, Sean, Bo, ALB, Julian, AA, 69 Conquer, appreciate you. Moonraker, always a pleasure. Exotic, Paolo, Paul, Pawan, wait a minute, silly. Low and Phi, Tono, Urban, everybody out here, thank you for tuning in. I appreciate it. Cheers. Goodbye. Be safe out there. All right, see you, Fly Lear. Coco, later.